Hey folks, welcome aboard. Just doing a quick audio video check here. Check here. Hmm. Can you hear and see? Okay, if you would type in chat. Oh, thanks. Hey, thanks, Jeff. Good to hear, man. All right. Get underway here in just a minute. So, Steve, good to see you here. And we've got it's about 200 people registered for today's event, so it should be a decent turnout in about 10 minutes. Keeping out of trouble here. All right, well, we'll be getting underway in just a few minutes, folks. That's noodling around here on the horn. We've got our schedule here. So big turnout, and it's new speakers too. So, yeah, but Steve Nissen, Jeff Killian, Dan Passarelli, Norm Hallett, Marina Villatoro, Harry Boxer, and myself. So looking forward to seeing y'all, and we'll be underway in just about 8 minutes. I'm way out of practice. I like to play classic jazz. Well. Like music trading always has patterns, right? We're always looking for patterns that repeat that we can profit from. So we've got a lot of those coming up in today's event. So looking forward to working with all you here. Got 192 people registered, so pretty good turnout. We used to get over 1,000, but still a couple hundred is good. So good to see you guys here, ladies and gents. And we start in just about 6 minutes, 7 minutes. Okay, good. Let's see if it's in there. Stop playing in a sec. Get on with it. Oh. Yamaha YTS62 Pro Horn from long ago. Right, active traders. Well, good to see you all here. We're going to be recording this for YouTube and for posterity, so you'll be able to see it for quite some time. Good to see you all here. We're going to get underway in just a couple of minutes. And so, Steve, I've promoted you to panelist, so it should be giving you a prompt on the screen, saying organizer has promoted you to panelist. Do you want that? And click yes if you would, and then I'll be able to give you control of the screen and all that. And thanks so much for being our keynote speaker. It's always great to work with you as always. Oh. Can one of you panelists speak? Or Steve, can you speak? Steve, can you speak? Maybe keep speaking for a minute. I'll say no. Steve, don't request multiple sharing. That's not the right thing. I don't think it says all participants can share. No, let me okay, we'll get this right. Let's see. Okay, so you're okay. So I've asked you to unmute.
There we go. Okay.
Yeah, I can hear you. Great. Okay.
Great. Okay. And should I try sharing yet, or wait until you're done with the introduction?
Yeah, if you would, just a. Oh, Steve, can you hear and see me okay?
Yep. Yep.
Okay, great. Okay, let me turn it over to you then. And
okay, should I share yet, or make sure I'm doing it right, or wait until?
Oh no, yeah, go ahead. Go ahead and share, yeah.
Okay, let me make sure. Oh, sharing is not turned on. Okay.
Let's see. I'll make you a co-host then, and that should give you the power to do that independently.
Allow. Okay.
All this technology, right? It's
wonderful.
wonderful.
When it works. Okay. Is that working?
Let's see.
It says you are screen sharing.
Okay, I stopped. Oh, there you go. Okay, cool.
Good.
Yeah, it's working now. Yeah, I have to remind myself then I have to stop my screen sharing before. Love this technology, right? It's great. It does work, but it's like cell phones. It's complicated.
Yeah.
let me do this. Oh, it is recording. Okay, cool. All right. Well, if you're ready, you ready?
I am ready.
All right. Well, hello, active traders, and welcome to America's Top Traders. We've got a really good episode coming up here with a lot of great speakers. Leading off is world's top candlestick trading expert Steve Nissen. I've worked with Steve Nissen from www.candlecharts for decades, and it's a pleasure to be on the stage with you again, Steve. Yet again, here we are, right? All these decades later. A brilliant guy. I use what I learned from him daily at work, so it's a glad to hear Steve, and thanks for being here. Very much appreciate
Oh,
it.
my pleasure. It's always great working with you, Ken.
Thanks. So take it away.
Thank you. So today we're going to be looking what we call secrets of the trading triad. I'll go over what the trading triad is in a minute. But first, always show you the risk disclosure, essentially reminding you there's a risk of loss of trading in any market in any time frame. So what we're going to be doing, as I just mentioned, is going over the trading triad. Although I'm known best for revealing candlesticks to the Western world, I also have decades of experience in Western technicals, and I would give the vast majority of my background is giving trade suggestions, and I'll go through that a little bit later. But essentially, the trading triad is Latin word for three, and the three-legged approach we talk about in our education is, yes, understanding the basics of candlestick charting techniques and strategies. But the second leg is combining candlesticks with Western indicators. And the third leg, equally, if not more important than the other two, is trade management. And I'll discuss what I mean by trade management in a couple of minutes. But essentially, for those of you who are new to candlesticks or may have learned online, which means you may have learned incorrectly, just to remind you that candlesticks are very easy to understand. We'll go over even using something as real bodies and shadows to understand how much insight you get into about the market's momentum. Safety first, in other words, avoiding what not to do. And I'm going to have a slide on that because knowing what not to do can be just as important as knowing what to do, because at the end of the day, it's not on how much money you made, but how much you didn't lose. And as I alluded to before, a couple of minutes ago, we're going to be looking at East, that is Japanese. That's what I mean by East, and West strategies. Candlesticks, very important. No matter where you are, we have students from 85 countries. They work in all markets, in all time frames. As long as there's an open, high, low, and close, you can use candlesticks. And the real power of candlesticks is, although we strongly recommend combining them with Western technicals, is they give you early reversals well ahead of traditional Western techniques such as moving averages and so forth. And we'll look at that in a couple of minutes. So as I mentioned before, just even understanding the basics of candlesticks is going to put you ahead of the competition of those who don't. So a green real body, or depending on your charting service, could be an empty real body, means that the opening is above the close. So this would be the opening, this would be the close. That's the high, that's the low. Red real body or black real body, depending again on your charting service, that means the close is down here, the opening is here, and the high is here. The high is here. Probably as many of you know, these are called the real body, and these are called the shadows, the upper shadow and the lower shadow. So even looking at this, just visually on this one candle line, although it's the same data as the bar chart, we can quickly see who's in control on this particular session. Obviously the bulls, right? Market opened here and closed here. And here the bears are in control. Market closed down over here. Now, when we have something like this, a doji, with the opening and closing are the same or nearly the same, who's in control? Bulls, bears? How about nobody, right? It's an equilibrium. The Japanese will say the market is tired, and this is important. Many traders and investors think during a rally and they see a doji, the market is bearish, turns bearish. That's not true. It means the market has gone up to neutral because now there's an equilibrium between the bulls and the bears. There are specific candlestick signals that do turn the market potentially negative, but a doji is not one of those. A doji is telling us the market as I just mentioned, is tired. And so we looked at the real bodies, see who's in control of the market. Even the shadows, the upper shadow and lower shadow, gives us volumes of information. So one of my trading principles, I have about a dozen trading principles. The candle line shows not only the price, as does the bar charts we used to use in the West before all the charting services converted to candlesticks. And this is why, because candlesticks also show the force behind the move. So here we have a market moving up, right? Higher highs, higher lows. Now, if this was a traditional bar chart, we'd say, okay, the market looks particularly strong. However, look at the candlestick lines that I highlighted, long upper shadows. So that means during the session, and this happens to be a daily chart, it could be a 1 minute chart, it could be a weekly chart, the market had rallied, and by the end of the session, it closed here. Yes, it's a green real body here, but look what happened. Rallied, sold off by the close, rallied, sold off by the close. So although the market's moving up, and I wouldn't, these are actually kind of negative bearish candlestick signals or shooting stars. But even if you didn't know that, this would definitely be a warning sign not to be suckered into going into the market from the long side. The Japanese, in a case like this, and this is one of the great reasons that I spent a year on translating the Japanese information from the original Japanese source. I mean, I didn't. I paid somebody. He took a year to translate the Japanese books, and then I took a year to put it all together. They had expressions like this: the market's rising in agony. I mean, that's so picturesque in their interpretation and the phrasing with the candlesticks. So here, the market may look healthy on the outside, but internally, the candlesticks are saying it's a warning. Now, I mentioned that candlesticks can be used in all time frames and all markets, and I know many of you trade options. And the reason candlesticks are so important for option trading is that although we know implied volatility is really important for option trading, far and away, direction is the most important thing you need to know to make money or potential money on any options trade. We always should take into account implied volatility, but trend is key. And one of the major advantages of the candlesticks, as we know, is those early reversals. So here, for example, we have, this is technical indicator stochastic. So MACD, I'm sorry, the MACD. And the MACD, for those who don't use it or may have used and forgot, when you have a crossover, it's usually a bullish signal. It's a lagging indicator. But here we had a classic hammer with the candlesticks. It confirmed a support area, which is really important. So we did a theoretical. So let's say we buy at the hammer. Okay, the market's at 395 and the 400 call, pretty much an at the money call, theoretically we're worth $11.30. All right. So we're going to be exiting at the doji over here. Okay, it's a new high close, but it's a nice time to take profits or lightening up. So 13 days later, so we lost some time value, and the theoretical value is 447. So we made a 320% return by potentially buying on the hammer. And by the way, you should always set a stop. So I'd have a stop under the low of the hammer. I'd probably have it under the low here. We'll look at that later. So if you bought it here, your stop would be under here. So let's look at the second scenario where we didn't know about candlesticks. We use the MACD crossover. So here we would get the buy signal. The theoretical, we do an at the money again, a 420 call, get it for 1325 a couple of days later or 5 days later. We sell it also at the doji. So there we made 132% return. So in other words, by using the candlesticks correctly, we generated potentially over twice the profit. And this is what I mean by early reversals. Okay? Now, a key aspect of successful trading that I'm going to touch on very briefly. Remember, I talked about if you're buying this hammer, you should use a stop here, is the correct use of stops using candlesticks. And risk control is a key component to trading success. One of the things that I will always do when I put a new trade on is I'll put a stop immediately as soon as I do the trade, because that's when I'm most objective. And just to give you a sense of how important risk control is, prior to starting my own company, I would give trade recommendations to the brokers. I worked at Merrill Lynch and E.F. Hutton and Shearson Lehman and so forth, and I worked for a broker. And um, we would keep, these were all the analysts who gave trading recommendations while I was at Shearson Lehman Hutton. And so notice, although my name is on the low on the list, I had the highest P&L. And what was interesting about this is I had more losses than gains. And the reason, and by the way, this is really what kind of gave me the incentive to continue using candles. I didn't reveal the candles at this point. I wanted to kind of test them out in the real world. So the trade recommendations I was giving to the brokers was based on candlesticks. They didn't know that. And that really gave me the impetus to continue paying for the translations and to take the time to interpret what the translation said from the Japanese literature. Anyway, so I had more losses than gains, but by using stops correctly, I was able to have a relatively good P&L compared to the other brokers. So for example, here, and this is an hourly chart, I tried to give different time frames, and here it happens to be in Forex. So once again, doesn't matter what market you trade. So this is what's called the bullish engulfing pattern. A green real body wraps around a red real body, or it could be a doji. So if you buy in this bullish engulfing pattern, immediately, okay, you should set a stop under the low of the bullish engulfing pattern. So in fact, the market pulled back here, made a hammer. You could even have bought over here. But even if you bought over here, all right, your stop would be here. And if the market got under there's always a price that says we're wrong. If the market got out under there, if you were long, you were wrong. So, and then the market continued rallying. It hesitated a little bit over here, so maybe I'd move up some protective stops. But this would have been my target. The highs over here. This is called a dark cloud cover, just FYI, where red real body gets partially into a green real body. So that would be a target, a potential target. And but always use stops. And that's what I mean about risk control. So candles are great for setting protective stops. You could use the low of the bullish engulfing pattern as support. This is another bullish engulfing pattern. In fact, you could have used the low here as a stop out level. I probably would have given it a couple of pips to down here. But once you have a bullish engulfing pattern, you could set a protective stop over here, and the same thing with a dark cloud cover. If it gets above, you could use the dark cloud cover as potential resistance. And once you have the education that, and I'll talk about that in a couple of minutes from us, you'll know how to do particularly effective ways of setting stops and risk control. One very important concept is candles in context. And what I mean by that is using candles in the context of one example is Western technicals. But before I move on, because we, I have a lot in a short period of time, is we're going to look at Western technicals in a minute, second leg of the trading triad. But before I forget, I want to give you this link here. At the end of the session, I'm going to give you more details about this, about how to get a free seminar and some gift cards. That is the link, countercharts.com/money. So I just wanted to show that to you very, very briefly. Now, I mentioned before the importance of combining Western technicals and candles, and we're going to look at examples of that in a minute. But these are just some of the books I had translated from Japanese to English. Okay. And this is actually, this is why it took me a year to put everything together from the translations. Each one of these pages is an English translation of these books. And this is all the English translations, hundreds and hundreds of pages. And so I had to put everything in order. So I had one thing that said hammer, another one engulfing pattern, and so forth. And the reason I mention this is because in each of these books, each of them here, they also talked about Western technicals. And the Japanese have been using Western technicals, moving averages, trend lines, oscillators for generations, and they combine them with candlesticks. And that's what I strongly recommend that you do also. Some of you have your favorite indicators. I like keeping it simple the old KISS principle, keep it simple, stupid. I like looking at horizontal support or resistance, some moving averages, and then I'll combine candles to confirm the, let's say, a low or a high resistance or support area before I pull the trigger. I'll also look at risk reward, which I will touch on in a minute or a couple of minutes. So here is a nice example of the importance of Western technicals and an example of doji candles in context. Now, here we have a doji. Okay. And this is kind of a trading range. I'm making this a resistance area and a support area. So we can imagine, the market moves up here and stalls, goes down here and stalls. The Japanese will call this a box range. Right? So what we call a lateral trading environment. So here, let's say the market moves up here and there's a doji. Now, is this doji telling us there's something different about the market? When you think about it, this box range is telling us the market is kind of neutral. Okay, it's kind of undecided. So here we have a doji kind of reflecting the same thing. There's an equilibrium between the bulls and the bears, and same thing in a little larger macro environment. There's an equilibrium. So in this case, the doji is not showing us anything significant that we should base a trading decision on, right? However, what if there was a doji over here? What is that telling us? Okay, the doji in and itself may not be bearish, that the market's turning a little bit more neutral, but what would get us a little bit more nervous about the doji, in this case, green, and forget about the fact it's green. I just did that to make it different than the black doji here, then compared to here. This doji is confirming a resistance area. So the odds of the market, let's say reversing, are higher here than they are here. And this is really important. Candlestick signals, yes, a doji looks like a doji, looks like a doji, or hammer looks like a hammer, no matter what market it's drawn on. But where it is within the market and how to analyze it, that's what education is all about. So, okay, and that brings us to one of my core trading principles. Analyze candle line at support or resistance. Here's a resistance area. As I mentioned before, many candlestick signals can be used as resistance. A doji can be used as resistance. Look, there's a doji up here. You could use it as resistance. So right at the doji, we get a shooting star. Okay, long upper shadow here. This is not a shooting star. The real body is too big, but we're getting bearish confirmation of a resistance area. Here, we have a bullish engulfing pattern. Immediately, we set a low of the bullish engulfing pattern based on the close as our stop out area. So it got under at intercession, but it didn't close under it. So here we have another bullish engulfing pattern confirming the support area. I don't think I'd be buying here. If I did, I'd do it very lightly because yes, it's holding support as a bullish engulfing pattern, but there's really no turning signals yet. Here we get that bullish turning signal. So this is why I put east plus west equals increased trading confidence. Same thing here. Okay, once again, an intraday happens to be on Forex. Here's another doji. See how it became resistance? Here's a bearish engulfing pattern, red wrapping around the green. Just draw a potential resistance area right over here. Wait for a potential bearish candlestick signal here. Because at Forex, it's very easy to short. Or if it's an option trade, you could buy a put. Many of us don't short in the outright equity market. So here we have a dark cloud cover right over here. And if you did sell here or Forex, I'd have a stop probably above this high here, not this high. So here we had a bearish candlestick signal. Even if this wasn't a bearish engulfing pattern, was a high, I still would draw a resistance area or right over here. Confirmation, boom, think about selling it. My target would be the low here, the bullish engulfing pattern right over here. All right. Another reason for Western technicals is candles do not give price targets. Okay, as great as they are for reversals, they don't give price targets. So here we have an ascending triangle, classic Western technical. Okay? And you can see here this doji confirmed a resistance area right over here, right? Market sold off. Then it got above the doji, so it's a bullish breakout. You can actually think about buying it here on a close above this. Anyway, what I'll be using Western technicals is price targets because candles don't give price targets. So the ascending triangle, very easy target. You take the low from the essentially the base of the triangle, you add that to the breakout area, and that's your target. And as you know, for those who use Western technicals for price targets, it doesn't mean it's going to be a resistance area. It just, in theory, is a potential target. It may have resistance here. It could have resistance here. But here would be a target. So if you buy in the close here, okay, and for reasons beyond this session, I use old resistance as new support. Once it closed above here, my stop out would actually be here, and my target would be over here. Now we got a bearish signal, coincidentally near the target, with a bearish engulfing pattern. And you can see who's in charge here with this long green real body. Bulls, right? Now it's a little bit of hesitation. It's still bullish, but now there's a bearish engulfing pattern. One of my favorites is box range breakouts. Okay, the market's in a box range. I think of it as like a coiled spring. And once it breaks out, here again, I'd use the old resistance as new support. If it breaks out, you have a potential target. So however you get price targets, you could use in your candlestick chart. So here's one example of not understanding candles correctly. So the market had a shooting star, and oh my goodness, the market rallied after the shooting star, right? Candles don't work, and I'm the first to admit candles are not 100%. But to understand the candles, you have to see the shooting star. If you are bearish here, you have to be willing to risk to the high of the shooting star. And this is actually a good short position because this shooting star actually confirmed a resistance area, right? And look what happened after that. Here we have candles in context. Is a particular candlestick signal called the gravestone doji. I'm not going to go into what it is now, but it's essentially the open, low, and close or near the low of the session. It sounds really ominous. And a lot of times it is a turning signal, but this is a bearish signal. The market gapped higher. And in candlesticks, a rising window, a gap is a support area. So you should not be selling here because it's right at support. So it's all these important nuances that's so important that will help separate you from the competition. Now we're going to be looking at trade management, third leg of the triad. Okay. And it's one of my key trading principles, core trading principles, risk reward. I don't care if you have a dozen candlestick signals confirming a dozen Western indicators, you always have to take account risk reward. So the three things that you need to think about is the candlestick signal. Second thing is confirming a Western signal, whatever you find your favorite Western signals. And then the third aspect is risk reward. Here's a nice example. Here we have a bearish engulfing pattern. Okay, black wrapping around the white. And normally, this could be a red real body and a green real body, but some of you, as I mentioned, may have black and white on your charting services. So I did it this way. So this is a huge bearish engulfing pattern. Okay, and this is a shooting star, long upper shadow, small real body, black or white at the bottom end of the range. And let's say this is a Forex market, or you want to use a sell signal to lighten up in a long position. Which is a better signal to sell? Is it the shooting star or the bearish engulfing pattern? And let's say these are both confirming a resistance area, right? And the answer is we really don't know. Why? Because we don't know what the risk reward is. We're looking at these in isolation. Here we have that bearish engulfing pattern. So if you're selling it here, your stop is here. And my target would be down there. So you're risking this to make that. Is that a good risk reward? Not to me. Here we have a shooting star, a doji. Okay, at resistance, it got above it, but it didn't close above it at resistance. And in this case, my target might be here. If you sell it here, is that a good risk reward? And the answer is yes. Yes. So as the Japanese would say, we're waiting for time to ripen. So in this case, a very bad risk reward, I would step away from the potential trade. This is a good risk reward. Okay. Same concept here. One of our students, as I mentioned, we have students in 85 countries. There was a bullish engulfing pattern. I think this was like a 4-minute chart. A bullish engulfing pattern. So he went long, a bullish engulfing pattern at support. Okay. There's a support area. It broke above a resistance area. Okay. The falling resistance line. And he bought there. Okay. And he said, was this a good trade that just didn't work out, or did I make a mistake in judgment that I can't see? And not all trades obviously are going to work out. That's what stops are all about. But he did make a mistake. And what do you think the mistake was? Yes, we had a candlestick signal confirming support, right? He was right on that. Well, what did he forget? Your drum roll, please. Okay. Risk reward. So think about it. If you're buying it here, okay, this yellow line should actually be here. If you're buying it here, so let's say around 15, yeah, uh, let's say it's 15.29, let's say. If you're buying it here, your risk is here, okay, below the bullish engulfing pattern. So I'd have a stop here. And your target would be, this happens to be a bearish engulfing pattern, but your target, or my target, would be, so that's your risk. It really should be, that's your risk. It should be here. The target is that. So that is not a good risk reward. Now, if your target, because candles I didn't, as I may have mentioned, don't give you price targets. If your target is all the way up here for whatever reason, then that's fine for the risk reward. But to me, this looks like an obvious resistance area. So this is a poor risk reward, and that is the mistake that Gary made in judgment. So we started down the path of candlestick education. And as I mentioned before, I wanted to give you an opportunity to register for a live webinar we're doing that's going to provide a tour of our site and how we help traders and investors just like you from literally around the world to get the correct education, because you think you may be educated in candles, but one mistake in misunderstanding the candles can cost you a lot of money. So you'll understand more about our education programs and services. And just for registering for the live session as a special bonus, we're going to give you the option of 2 different gift cards. And you can go to this link here and read more about it. And you'll also have the ability, there's actually a drop-down menu under here. There's just a screenshot where you could fill in what type of trading you do. So we could personally design the best education programs and services tailored to your specific trading needs. And as I mentioned, you'll have a special code, money and money two, to get special gift cards towards any program and services that we have at candletrust.com. So once again, always a pleasure speaking for Ken. We have the best audiences when Ken does these seminars. So I'll turn it over to you, Ken.
Well, thanks so much, Steve Nissen, and highly recommend Steve. As always, he's the best guy out there to learn trading from. The candle patterns. What I like best about Steve Nissen's training is there's no ambiguity. It makes it very clear by using both the candles and his trade management techniques, where support is, resistance, how to manage the trade, and how to spot patterns that can be extremely lucrative. So thanks, Steve. It's a pleasure having you here, and I appreciate it. All right, well, next up we have Jeff Killian. Jeff, are you out there? Let me unmute you. And
Yes, I am. Can you hear me okay?
absolutely, yeah.
Excellent, excellent. Well, the first thing I'd like to begin with is I want to thank you for giving myself and the VTC the opportunity to present today. And we put together, I feel, an excellent presentation to provide some knowledge that's not usually out there on the marketplace, hard to find information, turn to actionable intelligence so that real-time traders can understand that what they want to accomplish with their career, with their future, even if they're beginning, is definitely possible. And I'm going to prove that today by what I'm going to present. The second thing I want to say is, Steve Nissan, if you're still listening, I'm a big pioneer fan of yours from 25 years ago when I was first starting out, because I was going through, you know, the gauntlet like everyone, and I found you, and I studied your material night and day, and it helped me tremendously to become the trader I am today. So I
Great,
think
thanks.
that,
Thanks very much, Jeff. Can you hear me?
yeah, I can hear you.
Oh, great. Okay, wasn't sure. Great. Okay, thank you so much.
Yeah,
Yeah,
you're
that's-
welcome. I hope we have the chance to dialogue
Yeah.
someday, and who knows, maybe even meet each other.
Right.
So,
Yeah. Just very quickly, I met somebody who says, I bought your book. And I said, thank you. So you're the one. Anyway,
yeah, I'm the one that bought
true
many
story.
of them.
Somebody
That's
was
good.
selling some siding for the house. So, okay. Thanks for the
Uh,
nice words, Jeff. Okay.
Thanks, Steve. Yeah,
You're very welcome.
And Steve has a great sense of humor too. Yeah, Steve Nissen's brilliant. He's the thing is, it works. I mean, it's just I did 122 million worth of order flow year before last. I'm a really hyperactive, real money trader, and you have my word. Steve Nissen, what he teaches is extremely valuable.
Yeah.
And so let me turn it over to Jeff Killian. Jeff's a really sharp guy. He's got brilliant techniques. We've talked on the phone a few times, and he's really good at real time understanding price action and surges. And I'll let him take it away. But he's a very knowledgeable guy and a good person to work with. So, Jeff, take it away, and I'll turn it over. Thanks.
Okay. Thank you very much. So, for all of you who are here today, I would just please ask you to silence your cell phones, get rid of the distractions, because I want to hand over some very important information that I feel can help you become a better trader. And again, whether you're beginning, hopefully the intermediate level, advanced level, that's irrelevant. The fact of the matter is that there are certain things that I had to go through hell to learn that I'm hoping that a lot of people don't have to go through what I did in order to make it happen, because we have a big advantage now with technology and the amount of information that is available out there. So today I want to talk about a daily market call. I want to talk about Fibonacci levels. I want to talk about divergences. I'll show my actual numbers from today and yesterday, my profits that I made, fully transparent. Today was a little lighter than yesterday because yesterday the Fed's, 50 basis points, that was a big deal. And when you have that, combining it with today's, market getting into new highs, it's a very precarious situation to be in, because it can be dangerous. We have to proceed with increased caution, because the key to longevity in trading as a professional is risk mitigation. It's not the home run trades. It's the consistency of mitigating risk to the smallest amount of money, so that when the opportunities are there and they fall within the model of what we call the VTC high probability trade, you can take that with a lot more confidence and conviction. So a few links later, one to the site, one to a deal we're offering today for these people that have taken their time to come and visit us. And what else? Let's do it. Can everybody still hear me okay? I'm good. Yeah.
Yeah, sounds good.
Okay, great. All right. So you're looking at a end of day chart updated in real time, NCM, near contract month 12/24. We have rolled. And I know, let's talk clearly here. We have a very limited amount of time. We're already at 2:33. And I want to make sure that everybody understands the significance, the importance of going through an end of day analysis the correct way first, before you even think about crossing the bridge into real time. This is critical, because if you don't know how to do this correctly, if you just haven't got the information so far, then it's not going to turn out the way it could turn out. So without going into a whole explanation, let's go through this and talk about how to do this. The first thing to do is to make sure that you have a good data feed, have real-time data that's coming through clean, based on the right open, high, low, and close, and make sure that you're doing your analysis maybe 6:37 in the morning if you're going to trade the still overnight session, but the early overnight session, or especially do your analysis, come to a conclusion before the equities market opening and trading shortly after that. I do not recommend trading market opening. So here we have the prices based on in your contract month, check me 1224, ES, E-mini futures, and we have some levels that are laid out only to the upside so we can focus in on that area. And I'm going to blow this way up so you can see this clearly, because these were the most important levels, the focus for this session and this presentation. Okay, so the current prices have traded above this day here in question is 7/17/2024. Why is this day so important? Because 7/17/24 is the day when the pivot point high was established, although not quite as picturesque as people would like it to be, right? Here's the opening, and the opening price on that day is 5776.25. Now, this in and of itself, if it has anywhere near above the 21 period SMA, a title called POC, that is a point of control where the largest amount of contracts are traded, at a certain price and time, which becomes significant resistance to the upside. Not only being here, but being, where the market should tap out if it's going to be weak and turn back around. So I have laid out this level to the upside, and I have laid out the two highs that are right here. And those dates are drawn from 7/12, right, and 7/11 right there. So we want to take a good look at that and make sure that, is there anything in between these two levels? No, we have what's called on our end a free and clear from here to here. So there's a lot of distance to trade here, and there's a lot of distance to get up and above here, right, to possibly tap out and turn back around or continue to move to the outside. But my interest is always, if I get to a price profit target based on an end of day major daily level, where these are incremental levels because they have interruptions, I want to make sure that if the market taps out there and turns back around, that I can go short, because I'm a better short trader than a long trader, because I know I can make more money faster the majority of the time. So that's why I'm a better short trader, because that's where my focus is. I imagine I could be a better long trader, but I don't choose to be. So there's quite a bit of logic behind that and many years of experience. So write down the levels: 5776.25, 5769.50, and 5769 flat. Now that we have that squared away, let's go right into short-term money flow, which is the MFI. Most packages today have this indicator within them. Here we are, major downturn here when the market turns down, MFI leads back up to the upside after this point here, and the market trades back up. And this happened about 5-6 sessions ago where this took place. So the short-term money from the institutional players was definitely in the market when this market started to trade up again from this area right here. So that's good. Is that good enough? Not for me. For me, the market is trading up on a fair amount of strength. But most traders, they don't incorporate both short and long-term money analysis. So let's take a look at the CMF. The CMF is an entirely different computation that revolves around this mathematical formula. And it was also trending up, not quite as good as MFI, not straight up, with a correction here, but on today's opening of the overnight session at 6 p.m. Eastern Standard Time, that uptick that you're seeing right there, it was there. So that indicated to me, after the downturn, that this market had a really good shot of trading up on and to above that POC to the upside that I just mentioned, that I hope you wrote down the price to. So now for me, based on looking at the volume as compared to the price, the levels, the MFI and the CMF, my call is that I'm on the upside of net neutral, and I am going to be long level 2 or 3, which relates to certain contract sizing because of the market strength in real time. Depending on how the real-time trade setups come through, the contract sizing will change. But right now, we are definitely clear to go long today based on the setups, which is a great thing because it worked out. And after that, I'm looking at the Chaikin oscillator, which is a direct computation related to the MACD indicator, which is down, but that doesn't take precedence. It tapped out when the MACD got there, and now it's starting to fall back. So this at certain times has some merit, but in this case, it takes third place, and it is third place in the analysis that you should be doing. Okay, after that, we're looking at the stochastics momentum index, and I'm looking for the crossover, and I'm looking for the increased momentum to the upside, right? P2 minus P1 divided by P1 based on, the daily closing price. So mentioning the daily closing price, this is where the sum of all participants have decided that the market is really worth at the end of the day, literally, or on a 1 minute bar, 5 minute bar, 15-minute bar, whatever you're choosing is. That's what the sum of all market participants have decided, that is what this security, this instrument is worth at that moment in time. So I'm looking at that next in line, and then I'm looking at the MACD. Disparity widens as it trends to the upside. But understand the animal that you're looking at, traders. This is the slowest indicator on the EOD analysis basis, but everything is up. Everything is up. So I think that about covers the case on that. And I want to get into. I want to make sure I do this in the right level. Yeah, I want to get right into now a 1 minute chart where I have these levels laid out that you saw previously, because I'm actually trading off of a 1 minute chart, right, to make my entries and exits. So let's get into another workspace and we'll pull that right in so we can get into some of the real meat of the presentation. And yes, real time. Okay. So this is a chart of ES, again, near contract month 12/24. This is earlier this morning before the prices traded up above the highs drawn from 7/11 and 7/12, right? I believe those are the correct dates. These are the dates I mentioned before. And here's the open of the down close of 7/17, which is a major POC here. Now these levels are extrapolated from my my single daily chart within my real-time workspace, and then copy and paste it onto my 1 minute chart. So they are exact, an exact replication. And so here they are. And this is the area that I spoke about earlier, that I felt that if I get up to here, which is a major POC, I'd want to go short. Now, most traders, they have no idea, if we're going to get up into new market highs, I mean, or close to that between here and here, right? Especially between these two levels. There was nothing on an end of day chart. This was a free and clear. How do we possibly calculate how far, what are the levels in between here and that we can use as price profit targets, or points where you might get a pivot point high to turn back around to the downside? So what I want to do is I want to back these off here just a little bit. How are we doing on time? 2:42. Okay. And I'm going to fly in a fib layout F8 here that I'm going to use just like this. Okay. Now I may not have the levels 100% matched from here to here, but we're pretty darn close right now. So let's open this up. Let's give this a different color. And let's apply this, and let's get it out, extend it to the right, excuse me. There we go. All right. So now we have levels laid out that most traders have no idea whatsoever about. No clue. Now we have a roadmap that we can gauge our entries, our exits, based on, percentages that are backed off from 0 to the downside at 23.6, 38.20, 50, 61.80, 76.4, and all the way back down to 0. I'll raise that up just a tad. So as we move into the hard right edge, the future, as the day trades on, and you know what, before I do this, Let me see if I have this. Yeah, this is where I was with a double layout. I'll get into the upper layout in just a minute, but this is where I was. You can see there's no prices over here. So everything I'm telling you is exactly on the money. Fact checking myself, right? All right. So there you have it. Here, we move into the future, right? And prices trade up all the way to here, 23.6, and they turn back around. They trade up to there again. There's a doji at the top and all the way back down to here. Okay. Look at how the prices are contained almost in these levels, right? Look at the moves that you could have gotten even from here to here, right? Back off from here all the way down to here, maybe from here to here, knowing that they do become high probability price profit targets. Maybe PPT number 1, PPT number 2 or 3, depending on how far the market trades down to previous levels that have been laid out in the past, broadcasted out into the future, so that the market can find its way back down to these areas, and you use them to get out on a rally, lock in a profit, minimize the trade time, and lock in the maximum amount of profit. This is the name of this business. There is nothing more important than know exactly where you stand every single minute. If you're not finding and tracking and trading with the largest institutions, if you don't know what they're doing when they're doing it, I'm sorry, it's not the same. So here we are again, where price is starting to trade above here, right? And then they move up, and here we have a penetration. Is that a probe? Is it a blow off? We don't know yet. A probe for future directional price movement or a blow off? We don't know. So what are we going to do? We're going to take this and copy and paste it. And we're going to put it right on here, where we're going to overlap these two levels as best we can based on the time limitations. Okay. So here we are. And then the prices trade up to here to 38.2, trade back down. We'll move a little quicker here along the way, right? And there you have it. Okay, all the way back down to here. So when we look at something like this, we look at the, the possibilities. Here's your pivot point high of, where to get in. What do I do? And getting through this level right here was very clear. The 50% level, okay? The difference between here, 0, and the previous laid out open of the down close, the major POC became the target. You could have run it down to here, and best of all, as soon as you got through there, you're short, and you're looking to just get from here to here, possibly from here down to here. You want to get right out of the box in as quick as you can, and as soon as you get a hit at a price profit target that's laid out here that really was otherwise unidentifiable, so to speak, you're out. Again, locking in the maximum amount of profit on a trade and, waiting for another real opportunity. So based on that, there's a lot of information there. And we don't really have a lot of price chart pattern uniformity here. There's a lot of program trading going on. So this is tough to trade. It's not like, maybe earlier in the day, right, when things were a little bit easier, right? And you had something like this, or calming down like this, and something like this, right? Yeah, this is really what you want, but you didn't have it. So when things get a little rough and, in terms of higher volatility, there's still an opportunity once you get seasoned enough and you have enough training behind you to be able to trade the market, I would say 60-70% of the time. So let's get out of this, and where are we at? 248 divergences. Okay, we'll get into that in a minute. Okay, back here, and 1 minute chart, and here we are here. Okay, and okay, I've got it. When I studied with Tom Borovic, some of the older fellows in this room probably know who he is. I really had a major transformation in my trading, because I realized when I did enough model examples, enough dissection, enough research, my analysis, going back as many years as I could, that divergence analysis was really something that was extremely powerful under the right circumstances. So we don't have the time to go into all of this right now, but I just want to present one quick example about how divergence analysis can prove out the pent up, in this case, selling pressure that's behind the prices that has not yet taken place in the form of the future directional price movement, aka where the prices are going to go in a short period of time. So when we look at this chart, this is a VTC VMA. This is a custom indicator, which has certain calculations behind it. I can't get into it too much, but I will say that it's based on the bid-ask moving average, okay, of all the orders that are above or below the market, okay? All the orders that have been hit above or below the market are depicted in this moving average. Now, if you're buying into the market, you're buying the bid. If you're selling the market, you're going short. You're hitting, the ask. So here we have the prices with a flat double top. Here's your trend line, horizontal trend line attached to these two data points right here, 1126 and then 1150. But if we look at this, we have a peak that's established at 1122, a little bit before that, where this tapped out, and then down here at 1151, right? Now that's before the market fell down, and then you see how the indicator falls off. So if we back it up just a little bit here, and we take a look at this, we can see the pivot point was formed in real time within 1 minute's time in real time, and the price is traded down significantly. It doesn't look like a lot of points as you see the chart, but if we blow it up, right? If you were short somewhere, right below, maybe at this point here on the opening of this bar, you're writing it down from somewhere in the neighborhood at the open, 57.7750 to this level here, which is 1 minute on that bar's close or below it. If you're using this as your basic price profit target in real time, right there, this pivot point low, there you have it. It hit it in 1 minute. And then if you're going to go down any further in that, you're looking for the next possible area where you have some support, right, to the downside, and maybe a little further to manage the traders. If it all depends on how long you want to stay in the trade, and you're managing it in real time as it happens. But in any event, and again, this is not the best example, but it is a good example of what, even under current situation of high volatility, what this advanced technique can do for you. And we use this on an end of day basis and in real time. It doesn't matter whether you're using a 15-minute chart, a 5-minute chart, or you're using it for order flow. We have many proprietary order flow indicators besides this, with the histogram below that shows the orders here, right? I mean, look at the volume that came in as it dried up. What time was that? Oh, how about that? 1151. And this indicator shows all the orders above and below the market, the bids, the ask, the average, in histogram form, the numbers behind them. And if you have a yellow tip, it shows that they came in so fast, the only way they could be that color is if they were back-coded orders, which means the largest institutions get their fills first and everybody gets theirs second. So that's how we know who's trading a blow off here, for example, before the market starts to trade back down, right? 8,000 over 7 and some change, not a bad divided amount. And then what happens after that? The blow off takes place, prices trade down, you get in here and you're riding it all the way down if you were there. So there's your divergence analysis with the VTC VMA, the VTC prop volume histogram, bid ask, divided difference, and 253. Okay, yeah, I have to get back into some of the charts here. Screen shares. Okay, here we are. Let's get rid of this. By the way, this is a 5-second VTC VMA and a 5-second VIT volume, so we know how to manage the trade in real time. If anything happens, we're good. By the way, look at this. Here's a lower high, a higher high. Here's a higher high and a lower high and a blow off, and the prices trade back down. Interesting. Anyway, so this was the screen capture that I created for this presentation. Again, here's the fib levels. So you are I am fact checked according to you to show transparency and responsibility. And then from there, we move into some of the numbers. Check me here, 918 at the top, 919. Here we are, a couple of days worth of trading. And I'm at 53.20. It's a little grayed out there because I highlighted that. At 59.60 on a total profit and winning trades, there your loss is 640. So that's a good run. That's a real good run. And there's a positive divergence that I wanted you to see based on 60 seconds, which we talked about earlier, right? So you get an example to see that. And this is a trade that I took short based on getting through the two lower levels that you saw previously. And then these here at 57.69.50 and 57.68 there, okay. The prices traded through here, lingered around, shook out this level a few times, but then higher volume came in, okay, and I decided to take this. Here's my preferred entry in turquoise at 57.68.75, right after I get in for 4, traded short, ES. Here's the next shot, traded up. I'm down, I don't know, to $25, you know, in the green. And then the price trade down again, and then again. Then again, they were back up on a turnaround. So at this point, you're looking to get out at the price profit target that was listed here, right? Right around this point. Because in real time, the order flow came in and said, these prices are going to go north. So you get out there and then you look for another opportunity. Positive divergence came into play. We're going long, turn right back around. The preferred entry turns into a entry again to the upside, or possibly even here above these two incremental levels. So we're very precise, very strategically planned in order to get in at the right time and manage the trade correctly. And as you trade up, there's more. And I'm out at about here where this POC exists, because if you can see the volume here, this is where the sell-off came in, and I'm out on a rally here. The prices did trade up higher, but I chose to get out to lock it in because I didn't know what was going to happen here. I had an idea they might continue to trade up, but probability-wise, I said, no, I don't want to deal with that. I want to lock in what I've got, and that's it. And so the prices did trade up a little more. What else? It's another trade just came in recently. And okay, no, let's get back to the numbers here. That's 9. Got to move forward. 15. Yeah, it's level 2 custom indicator. Here we go. Okay, there's 918 and 19. So 918 and 919. So that's pretty much what happened and what transpired today. Before we go, I want to get a link into our trading course that let me see if I can figure out how to get this in here.
Oh, thanks, Jeff, for the presentation. Really good information. Yeah.
Yeah, I'm trying to figure out how to get this link into the so the participants,
I just copy and paste in chat.
yeah.
Okay, so we're gonna wrap up and move on to our next presenter. For Dan Passarelli's out there, but yeah. So Jeff, thanks. Really good information. I like the price action. Your focus on price action is really good. You've got really good insight in terms of the timing and how to manage entries and exits based on price elasticity and that kind of thing. So really good information. Thanks.
Yeah, you're very welcome. For more information, on what we have to offer, we do have a course offer, but I can't seem to get it in the chat area. I don't know why. It's the first time using GoToWebinar. Well, it's a third of the price of what's published on the web. You can reach out to us. We'll get it out to you within an hour.
What's the link? I can hand type if it's not too long.
Yeah, that could be a little difficult. I can't seem to find out why I can't find it. Okay, here we go. There it is. Here it comes. Excuse me.
Okay.
There you have it.
All right. Well, thanks so much. I appreciate it. Thanks, Jeff.
Yeah, thank you very much. I appreciate the opportunity. And again, for any information required on what we have to offer executive mentorship programs, just please be serious and be willing to do the work. Thanks again, Ken. Thank you, Steve. You guys have a great presentation.
Thanks, Jeff. Appreciate it, man.
You're welcome. Bye.
Bye. All right. Well, is Dan Passarelli out there? Dan in the house. Let's see. Oh, there you are. Okay, cool. Thank you, sir. Let me get you lined up here. Hmm. 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 Trying to. Hmm. Hmm. Take just a minute here, folks. Hmm. Okay, here we go. And within 60 seconds. Okay, here we go. Allow to talk. Promote you to panelist. Promote you to panelist. Okay. So, Dan, are you there?
I am. What's up, Ken? Nice to hear from you.
Yeah, you too, man. Yeah, good to see you back.
Good to be.
It's been a while.
Indeed.
I've spent a lot of time in Vegas. So, anyway, it's let's see. Can I get you to screen cap, or I'm sorry, to screen share?
I don't have those options yet. I don't know. Maybe I haven't been fully promoted to whatever I got to get promoted to. I can't share. I can't show my video.
Okay. Well, okay. Now you're host. I'm sorry. No, this is Jeff. We'll get there. No, I don't see you anywhere. You disappeared. Let's see. Yeah, I don't see the panelists or the attendees list. And Dan, are you there?
I am still here.
You're here, sir. Well, I apologize. I'm usually pretty good at this. So many people here. Okay, there we go. Okay, we'll get it. Promote to panelist. Okay, so now you're a panelist, sir, and you should be able to do things now. So I will ask you to unmute and also enable the video.
All right, man. Unable to start video because the host has stopped it.
See. Okay, there we go.
Oops. Great. Hold
I'll make you a co-host. So it's elevating. And sorry, folks, for the technology delay. It's complicated software. So Dan, can you, I see your slide. Can we get your video?
There we go.
There you go. Hey, all right. Well,
Hey,
good to
man.
see.
Good to see you as well.
Yeah, you too, man. It's been a few years. It's been a while. So,
Yeah.
well, Dan Passarelli, outstanding person to learn from in the trading industry. And I want to thank you so much for being here. And I will turn it over to you right now. So thanks so much, Dan. Thanks for being here, man. Appreciate it.
Yeah, good to be here. So, hi folks, Dan Passarelli. Before we get started, options are not for everyone. So, all right, we're talking about this here in September because you know what? The historical performance, this is the worst performing month, which leads into problems with seasonality. It's just a bad time of year traditionally for the market. People are harvesting tax loss. They're selling off a lot of their losing trades, which pushes the market lower, doing post-summer adjustments. There's a lot of end of year uncertainty, especially this year. And just all those things lead to psychological factors. So the question is, how can I make money in this market? Well, for a while, we were able to make money with straddles, just buying volatility. But what we've seen recently is we've seen these up and down trends where we just get a big move downward for a week or two or three, followed by a big move upward for a week or two or three, downward, upward. And we've got these mini trends. So here's my promise to you. I'm going to share how you can easily spot these mini trends and trade momentum. And by the end of this presentation, I'll share how you can take the next steps. Does that all sound like a pretty good deal, everyone? Why don't you give me a big old yes if you're liking what you're hearing here. Hit that questions box and give me a big old yes, will you? While I'm waiting for your responses, what I'm going to do is, oh, thank you. I got one in the chat box, which is great. Hey, thank you, folks. Okay, so this gives you an idea of who I am, what I do, some of the organizations that I've worked with. Basically, I've spent 30 years in the industry. This this spans about 30 years of me being on the Chicago Board of, Chicago Board Options Exchange trading floor. But let's talk about a discovery that I've made recently. Does anyone know what formula this is? Good, because you don't need to. That's not what we're going to talk about. What we're going to talk about is how I hacked the math. I spent a lot of time in option trading. Like I said, 30 years. I do whatever it takes to create great trading systems for myself and for you. So I studied the math of a lot of things, like RSI. That's what that formula was, by the way, to see how they tick. And I realized there's some hidden keys within these equations that can do a great job predicting when momentum will continue. The concept of RSI is it measures up strength versus down strength. And the idea is that when there's too much up strength, it can lead to overbought, which can lead to a reversal or retracement. So there's certain chart patterns that can prevent momentum from burning out. When we see those, they become more likely to actually continue and not reverse. And this is what I discovered, the knockout trading system. And there's two ways to trade it. One for uptrends called the red knockout, one for downtrends called the green knockout. They're both momentum trading strategies that can lead to outsized profits. They're a simple 4-part chart pattern, easy to identify, and the profit targets are easily set, and they can be used on options, stocks, ETFs, indexes, futures, even Forex. So if you're taking notes, now would be a great time to start doing that. This is the red knockout, which is 3 or more green update candles that make up what we call the green run, followed by the red knockout or the RKO candle, which is a red candle with a smaller body than each of the 3 preceding green candles. Then we have the trigger candle, which follows the red knockout. It's a green candle that takes out the high on higher volume, ideally. And then finally, if the entire thing sets up, we get a confirmation candle that opens above the high of the RKO, and that signals trade entry. Now, the green knockout or GKO, that's just the opposite. 3 or more red candles making up the red run, a green candle with a smaller body than the preceding 3, the trigger candle, and then the confirmation candle. So now let's break the strategy down step by step, go through some examples, and go through how it works specifically in this market now. So this is IBM. If we have a red knockout setup, what's the first step we look for? Setup candles, right? 3 or more green update candles in a row. Do you see that on the chart anywhere? How about there's 1, and there's 1, 2, 3, a total of 3. Now, what's next? You remember what step 2 is? If we see a red knockout on the chart, well, the actual eponymous red knockout candle is going to be that one right there. It's a red candle, easy to identify, smaller body than each of the 3 preceding green candles. Then we have a confirmation candle, which at some point during the day trades above the high of the RKO candle, which it did. And then if this strategy, or if this charting pattern sets up to completion, we get the confirmation candle, and it's 1, 2, 3, go. Now, let's talk about how to set price targets and haircuts. So in order to set the price target, what we're looking for is a repeat of the green run itself. We're looking for, like, if the stock rallies up $5, then we get that RKO candle. That's basically just a little mini pullback so that the run doesn't burn itself out. It gives it a little bit more down strength. And then we're looking for that $10 move or whatever it was to continue after the high of the red candle. So we take the low of the first green candle, subtract it from the high of the last green candle, take that sum and multiply it by a haircut. Now, what is this haircut? Well, look, we all like to make as much as we can when we're trading, right? But a lot of people like to be conservative and lock in winners a little quicker. You don't want to do it too quick, but lock in winners so that you have a higher rate of winning trades. So instead of waiting for that entire green run to play out again, we haircut it. We multiply it by a percentage, maybe 90% or 80% or 70%, and we wait for that to play out. And then we just add that haircutted value to the high of the RKO candle. Now, if that doesn't make sense, we're going to go through the calculation and make it really easy. So first we find the green run. So we start here, and then which is 184. That's the high right here on this candle, $184.16. And we're going to subtract from it the low of the beginning of the run, which is $174.45. So 184.16 minus 174.45 is 971. So we expect that move to repeat itself. We're looking for above the high of the red candle for another $9.71 move. But we want to be conservative, so we have a better likelihood of locking in a win. So here we go for a smaller amount than that by multiplying that number times the haircut. So 997 times, in this case, 90% comes out to $8.74. So on this trade, that's what we're trying to capture, is 90% of that green run move. A run up of $8.74 above the high of the red candle, which would be 874 plus 184.90 is 193.64. So when the stock hits 193.64, we want to close this trade and take our profits. Now, our system triggers the trade on the trade open of the confirmation day candle. So on this day, a trader trading the stock could have bought the stock, paying $185.44, and then 6 days later closed it at 193.64 for a profit of $8.24. Now, $8.24, that's a 4.4% profit in 6 days. So a stock trader trading 100 shares could have quickly added $824 to their account. Trading 200 shares would be $1,648. 500 shares would be $4,120. Now, if we were to annualize that, like, it scales, right? So whatever your normal trading size is, if we were to annualize that that 4.4% comes out to 264% annualized return. And let's look at another example. So this is Google, and this is a downward mini trend that's pretty easy to take advantage of with this system. The mini trend starts here and ends here. Then you get your green knockout, right? Little pullback from that downward move, followed by the trigger candle, right? Which trades below the low of the GKO. And then finally, the confirmation candle. Now, the rules stipulate to enter the trade near the open on the confirmation day, which is at $156.66. But we're not going to short stock. Shorting stock ties up a lot of margin, so I'd rather use puts. So on that day, a trader could have bought the September 27th 155 puts at $5.15. So we set up the target price to close when the stock would fall to $152.93. And we use the stock, to trigger the options exit. Because we're reading the stock price chart, that's where the pattern is. So we get a better read and thus get better results if we use the stock price to trigger the put sale. So 2 days later, when the stock hits 152.93, the 160 puts could be sold at $8.10. So this trader could have made $2.95 a contract, or $295 of actual money per contract. So a trader who bought one put contract could have brought in $295. Bigger traders who trade, say, 5 contracts could have made $1,475. And 10 lot traders could have brought in $2,950. Now, we see a lot of trades like this all the time. And it's possible to get good leverage on these, especially when using options. But I wouldn't be doing my job if I just talked about the big wins that are possible. I want you to be successful trading the knockout system. I bet you do too, right? So now I want to share with you what to do when the pattern doesn't continue so you can manage your risk and minimize losing trades. All right. So there's very simple risk management to this. Immediately after buying the stock or buying the call or put, we do 2 things. We set a profit-taking order and we actually enter it. We enter a GTC, which is good till cancel. So if any time between now and expiration, the stock gets to that price, it's going to trigger. And we also set up a possible stop loss. I say possible because if we do spreads, we don't use stop losses, but if we're trading stock or buying a call or buying a put, we do use stop losses. We set that up good till cancel as well, and we enter both of these 2 orders OCO, which means one cancels the other. So if we take our profits, it cancels the stop and vice versa. Now, the idea is that this is a system. And I listed out all the rules. We've only got a half hour. There's a lot of information I'm trying to cram into 25 minutes. Started a little bit late here, 25 minutes. So I want you to fully appreciate that this is a system. We work the system because the system works. Now, let's look at USB. So here is the green run right there, right? Then your red knockout. And again, and why is it called a red knockout? Because in any trend, there's a pullback. And in this case, this mini pullback is just enough to enable traders who missed the green run move to get in and provide some follow through. So the red candle just gets knocked out of the pattern. We look for continuation. That's just we get the trigger, which is already actually has the indicator on the chart. And then the confirmation candle, which has, and I'll explain why those are on my chart in a minute. But you might notice something that you saw on one of the other charts that actually makes these trades more profitable. First, see how the pattern starts following a down day. We tend to see these working better following any level of a down move, whether one candle or several. Next, see how it crosses the 21-day moving average. When any part of this pattern crosses through any of the 3 major moving averages, 21-day, 50-day, and 200-day moving averages, we see that these tend to work better. And this is a perfect example. This one worked great. Now, like I said, I might have mentioned this before. If any of these terms are new to you, I'm going to share a way to make all this really easy in just a couple of minutes. So this USB trade ended up getting closed out actually the same day. Boom, got in the morning, you get out at night. That's why we tend to like putting these on near the open, like the first half hour of the day. Now, as you can see, for the patient, this trade could have actually worked out even better. It took off even more after that. So sometimes I like to sell half the position at that conservative haircutted target and then let the rest run. All right. Now this is Helmerich and Payne, symbol HP. I'll bet you trade that all the time, don't you? Probably not, right? I'm going to tell you more about that in a minute too. So this is a green knockout, and it's a great one. This is not a stock people trade a lot, but it worked out perfectly. So here we have a nice, healthy red run, followed by the GKO and the trigger candle and the confirmation candle. So using a simple 90% haircut at the price target, we would set that down here at $30.40. All right. And this is all like very measured, very specific. We're never guessing what to do. We only put on the trade if it matches the system. Now, the morning of the confirmation candle, within the first half hour of the day, a trader could have bought the September 32.5 puts at $1.30. Then just 2 days later, the pattern continued on to hit the $3.40 price target, which triggered the exit to sell the puts. Now, the trader could have sold those puts at $2.10 at that time, locking in a 90-cent profit. So on a one contract trade, that's 90 bucks. 5-lot traders could have brought in 450 bucks. 10-lot traders could have made $900. And again, this scales to your size. Either way, that's like, what is that? 65% profit or something like that in 2 days. Now, the knockout system works in all time frames. We can use this, day traders can use this, swing traders, short-term traders, even long-term investors can use this. Now, it's quiz time. I've got a little quiz for you. Here's the quiz. Let's see who's first to get this. You got to be really quick. Get your finger on the button here, as they say. How many listed stocks are on the NYSE and the NASDAQ combined? What do you think? How many stocks are there listed on both the NYSE and the NASDAQ combined? Well, I'm just going to tell you. 5,704 stocks. Isn't that crazy? I'm going to tell you why I brought that up in just a second. Now, in summary, there are a few important takeaways. Momentum trades can yield outsized profits, and this is a time-tested system. We've got the setup candles, red knockout candle, trigger candle, confirmation candle, profit target. If you were taking good notes and you were listening closely, you can do this right now. It's very, very simple. I literally laid out the entire system, but there's a problem. There's 5,704 stocks. And a lot of these, some of them show up on Google or something, but some of them show up on some stock, Helmerich and Payne or whatever the heck that was. You have to go through all the stocks out there, 5,704 stocks. If it takes you, say, 45 seconds to pull up some random chart and look, okay, is there an RKO? And you can find it within 45 seconds. It would take you 80 hours a day to go through all the opportunities out there. And that's only looking at one time frame. You don't like missing opportunities as a trader, do you? You don't make a very good trader if you are okay with missing opportunities. There's few. You got to grab the good ones. So there's got to be a better way than trying to spend 80 hours a day, because there's not 80 hours in a day. And I bet you know that there's got to be a better way. You wouldn't be here right now if there wasn't. So the knockout system is here. Over the past few years, we created both a scanner that would easily identify RKO trades, as well as an indicator that it displays the pattern right on the chart along with the price target. We wanted to make it so simple, it's impossible to mess up. So I want you to start getting the results that you deserve. This was Nick Homburg from Alexandria, Kentucky, and he was one of the first people to use the knockout system. And he said using scanners, particularly the RKO Daily, helps me find trades when I'm busy or might not be fully locked into the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and it helps me find the best trades consistently. And Nick said something important there. It only takes me a few minutes to find the best trades consistently. With over 5,700 stocks to sift through, it's almost impossible to just happen to come across one of these great setups. Before creating the RKO system, I'd come across one of these setups maybe once every 6 months. I would miss so many opportunities. But now I've invested both the time and the money to develop this simple, easy to use scanner that makes trading the knockout system possible. And now I'm ready to share it with you. I want to invite you to join us and start getting red knockout and green knockout mini trend trades delivered to your scanner right now so that you can profit whether the market is running higher or going lower. This simple scanner searches the universe of over 5,700 stocks for the setup and makes it possible to find trades you'd never have access to without it. But I want to make sure this works for every single person here. So I'm going to give you a handful of bonuses along with this. For you to profit with the red knockout system, I need you to know how it works. So I created some accelerator videos that explain every single thing you need to know in order to effectively use the RKO and GKO system. So what that means is today you're going to get the scanner, you're going to get both scanners, RKO and GKO, as well as the accelerator videos for each of them as well. I can put the tools in your hand. I can tell you how to use them, but I know for me, I learn better when someone shows me exactly what to do. So the best thing I can do is give you hands-on training. Every Friday for the next year, you're going to attend our online live group coaching class and watch ex-Goldman guy John Kamisik set up red knockout, green knockout, and other trades right there while you watch. You're going to hit the ground running with this hands-on training. And this is what Dennis Meisel from East Peoria, Illinois said about that class. Thanks, great class. Exactly what I was looking for. The class gave me a lot of insight into options in the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. I mean, really, how would it feel to have top picks selected by John Kamisik every day while he shows you how and why he's setting them up and where he's getting out? So what that means is you're going to get both scanners today, the accelerator videos, and the hands-on training in group coaching every Friday morning. Mind if I over-deliver? What I want is for you to make as much money as possible trading these. So every day we're going to rank what we feel are the best RKO and GKO trades, and we're going to highlight them for you. So you don't even need the scanner. We're just going to show you all the trades and which ones are the best. And we're going to give you a bonus trade every day from the daily group coaching class, Monday, Tuesday, Wednesday, and Thursday. You'll be in it Friday, so that you will see all the top trades of the day every day. So that means you're going to get both scanners, the accelerator videos, the group coaching, and we're just literally going to tell you what we think are the best of those trades. Imagine what your trading account would look like if you could just sit in front of your charting software and have this powerful trading tool identify the top trades of the day. Well, you're going to put this script onto your Thinkorswim. It's going to show you the trigger candle, the confirmation candle, where to get in, where to get out, and even calculate the exit haircut. This could not be easier. And this system works on Thinkorswim, NinjaTrader, TradeStation, TradingView, Metastock, and Wealth Charts. Now, there's a total value of $9,041. You can see why this is a steal even at that. If all this did for you is give you a solid road-tested system for trading mini trends, let alone scanning the market for them, wouldn't it be worth it just for that? But today you're not going to pay $9,041 because you made the investment of being here on this training, and for being an action taker, you're better than millions of traders out there. I want you to have the results that you deserve. Get started today for a one-time, small, easy investment of only $997 by going to markettaker.com/RKO. 1, 2, 3, go. That's market as in stock market, taker as in take what's rightfully yours, 2 T's in a row, markettaker.com/RKO, and get all this right now for just $997. But you have to take massive action right now. Just to recap, you're going to get both scanners. So you can profit in up markets or down markets. You're going to get the accelerator video courses to show you what to do and get you up and running fast. You're going to literally get hands-on training on this every Friday. We're going to show you which is the best of the best with the watch list. And we're going to put the indicators right there on your charts. You can see exactly, here's where I get in and here's where I get out. Now you might ask yourself, you might say, Dan, I have a small account. I want to grow it. I can see this is a great way to do it. Is there a way to finance this? That answer is yes. You can finance with PayPal credit. Just go to markettaker.com/RKO. And if you have any questions, kind of ran out of time, but you can call. We have operators standing by at 773-302-1645. That's 773-302-1645. And you can just take your phone and you can just put it on that QR code right there at the bottom and get signed up right on your mobile device now. I probably have time for one really fast yes or no question if you have one. Anyone? No? Good, because you guys have a treat coming up. If I'm not mistaken, Norm Hallett is the next speaker, I think, right? What's up, Norm? How you doing, man? Good to see you.
Good to see you too. We knew each other when?
Back in the day.
Back in the day.
So yeah, well, definitely join markettaker.com/RKO, call the number, use the QR code, and stick around and listen to Norman. He has always got great things to say.
You're muted.
I'm sorry. I was animated. Dan, thank you. Appreciate it. Hey, Dan, I was going to say what I like best about your training is you cover things like entries and exits, and that's the one thing that traders miss out on is exits, like trailing stop or your stop. They get in and then they're clueless, and so the fact that you've got round trip information, you can really help them. Makes a big difference. So thanks, man. Good presentation too. I enjoyed watching it.
Oh, thanks. Yeah, thanks for having me.
All right, thanks, Dan. Well, Norm, my friend, how have you been, man? It's been a while.
I'm good. Before Dan disappears, I just want to tell everybody, I want to use 30 seconds of my time. Dan has, Dan and I have known each other for a couple of decades, I guess now. I guess you even got a little gray hair now. But Dan knows what he's doing. All the stuff you made easy, you're still you're like the hardest working coach in the business. And the fact that you've gotten these scanners now, I'm sure you're spending your time working on something else. But especially if you're new, I think, experienced people, but that's when I walk around the floor at the expos. Those are the kinds of people that always give Dan the big thumbs up. So don't be afraid of this. Dan will walk you through it.
Yeah, thanks. That, and you gentlemen are the example of the best kind of people out there in the industry. I appreciate you working with me because I know there's a lot of bad events with the pitch fest and long. And you guys are good, so I bet I get the very best of the best. And so I want to appreciate y'all for being part of the team. It's much appreciated.
Thanks. Yeah, I appreciate being here.
Thanks. So Norm Hallett, let me get our sharing. Can you share? Let's see. Okay, let's see. Okay, so Norm, do you have control for sharing?
See if I can share the screen here.
Okay, you got your video.
All right.
And now we need.
There's I knew a woman named Sharon Sheralike, but I don't know what happened to her.
That sounds like an interesting story. So, hey, everybody, a longtime friend and colleague, Norm Hallett. He's the best out there for coaching, especially on the mental side. It's one of the things that I've traded millions and millions of dollars with the stocks. I have tax return proof. If you're a technician, that's great. But if you don't have the mental side, you're going to wash out. You have to have both. You have to have a strong ability to execute and implement and work from a position of strength and have all the technical skills. You can't, it's a system. So you need it. So Norm, outstanding. I really enjoy honestly, your teaching and your training's been really good and giving people the right way to approach their trading and develop inner strength for it. So thanks. And looking forward to seeing your presentation, man.
I appreciate it, Ken. And actually, Ken out there, if this is a little secret, Ken asked me to focus today on the mental and emotional part, even though, most traders that are at our level have a particular appreciation for the mental part because, listen, we've all struggled. We've all struggled, but the struggle comes from lack of conviction. It comes from lack of trust in your trading plan and so on. So today I'm going to focus on the fear of losing. And I'm doing that because the fear of losing tends to integrate itself in other fears, fears like chasing markets and lack of patience and so on. The fear of losing, it's kind of like a Venn, if you draw a Venn diagram, fear of losing will always get a little chunk of every other mental and emotional ill that you may be thinking that you're being affected by. But, you know, unless you can control yourself, unless you can have a trading plan that you've tested and works well if followed, that's the easy part. It really is. There probably, you know, I've written several books on trading plans, writing and managing trading plans. And I've got to tell you that there's probably, you know, many of the trading plans that you see out there, not only the ones that I've created, but they'll make you money, some more than others, if you can follow it. So let's get into what that means now for you in the next 26 minutes. The Disciplined Trader is the name of name of my company. Actually, the name of the company is the Subconscious Training Corporation. That was the original name, still is, and these are companies that exist underneath the Subconscious Training Corporation. So the Disciplined Trader is all about the discipline. I want to talk about who will benefit from this. I'm going to go quickly through why you should even bother listening to me. I want to talk about what the promise is for this short presentation. I'm going to take you through 5 steps and a 6th step that I want to alert you to. And then I want to give you something. There's nothing here to sell. I'm going to ask you to opt into I'll tell you right now, to my 4-minute drill for traders, which is what Ken and so many other of my colleagues have given me some kudos for. There are actually 200 4-minute drill for traders that kind of hit you between the eyes, like I'm about to do today. If you're if you don't want to be criticized, you probably want to turn down the volume. Not that I'm criticizing you, but I want to give you the truth, and sometimes that can be hard to take. So I want to give that to you in these simple steps. Okay.
And let me just say, I just want to throw in my 2 cents worth. Norm's work on that is par excellence. It's the best in the entire trading industry. Get my word. He's really, really good. These things run through my mind as I put on the trades. It's really good to have that, like the energy, the building blocks, the things that run, feeding your subconscious mind healthy, positive things to keep you on focus when you screw up and you blow up a trade. How you get back on the saddle. This guy can help you with that. So thanks.
I appreciate it, Ken. And you know, it's tough. It's tough to look in the mirror sometimes and say it's me. You know, it's so easy to blame the markets and the system and they're taking my stops and all of that. Listen, we know all of that may or may not happen. Who knows? All we can be in control of is us running our trading plan. And before you run it, you got to know that the trading plan is decent. So I got to ask you this question. Then I'm going to go to the chat real fast and see if I can get some response to this so I can stay on track with those who respond. When you last experienced the fear of losing, what were the circumstances that led up to the fear? In other words, what caused the fear the last time you can think about? Were you hesitating? What caused your fear? If you can give me just a little bit of guidance in the chat, that would help me out. Hesitation? Anybody else with any thoughts? I'm going to just give it 30 seconds here because we don't have too much time, but I did want to make sure that I did. Okay, general fear or fear of losing is what we're going to cover. Okay, I'm going to have to trading without a plan. Well, I should. Can I punch you through the? I don't think I can, and I wouldn't anyway. I'd tap you on the shoulder and say, and shake you. I'd probably shake you. Didn't complete the analysis. You got to do all your analysis before you start trading, okay? And when you see something on the chart, then you can act. But all of that should be done. But overconfidence, a big one. Thank you, Anis, who mentioned that. Okay, I really have this is really going to hit you. So let's get going with it. I want to go with 5. Well, first of all, why should you listen to me real fast? Well, who will benefit? Let's go in order. If you look like this, or you're a woman that looks like this, you're going to benefit. It really doesn't matter whether you're a futures trader or a forex trader, whether you trade shares or stocks, options, bonds, day traders, swing traders. We have helped all of these people specific in the last literally 23 years that the disciplined trader has been helping not only corporate traders and institutional traders, but retail traders. So this is the heart of what we do. Even if you're a position trader, you don't want to worry about something overnight. The crypto traders, that's been our latest influx of traders wanting help. So let's get going. This is going to help. So let me just help you. Why listen to me? Because of my wife. That's why you should listen to me. My wife is a very well-known, in fact, the cover of Psychology magazine, Hypnosis magazine, everything under the sun has, Tisha has been honored over her storied career. I won't tell you how many years, but she looks really exactly like that. This picture was taken about 5 years ago. So I look a little older, but she doesn't. In any event, because she has teamed up, I took her out of her practice, or I coerced her out of her practice, and to bring her into the disciplined trader in order to really focus on helping traders with the mental and emotional piece. I've written several books on trading plans, as I've mentioned. So as Ken said, listen, again, you've got to have the structural part. That's important. And since I have math degrees, it's important to me, and that's kind of easy flow. It's the mental part that is the construct that you have to get going. There are books written about me. This is actually one of a CD that's still available, not a CD, but I'm sure it's a download now of one of my presentations and one of the expos. And this is the 4-minute drill for traders, of which I'm going to give you access to when we conclude. It's really what put me on the map. I did one every Saturday for 4 years, so there are over 200 of them. I'm going to piecemeal them to you. I worked for Payne Weber. I did run one of the largest option firms in the country before Payne Weber kind of bought me out. That was going on during that period of time. Started my own. I was a commodity trading advisor for them. Decided to just do it for myself. And again, recently I've been focusing with my wife on the mental and emotional issues. So what is my promise for this quick presentation of 19 minutes? And it is, I'm going to give you all the elements that you need to eliminate the fear of losing from your trading. What's more is, by eliminating the fear of losing, you'll be proving to yourself that there is a simple process to reverse other detrimental trading habits like overtrading, which somebody mentioned. Anisa, I believe, mentioned that. Hesitation to pull the trigger, revenge trading, getting over losses, lack of patience to wait for the eight trades to develop. All of those things can be handled by you working on yourself. And there are some very simple ways to do it. I'm going to give you a few structural ways and then a bonus way at the end. Your vision is going to be clear at the end of this, that you can be a successful trader, even though you've been struggling, and that you know that you're capable of being a successful trader. I'm assuming that you have a trading plan that you can trust. Now it's a matter of trusting yourself to follow the trading plan. So let's go through the simple steps. The first step is you need to be comfortable with your risk. I've been coaching some prop traders lately, as well as institutional traders. It doesn't matter the kind of trader that you are. You've got to control your risk, because it is the risk element that feeds the fear of losing. Even a trading plan that is right 2 out of 3 times has a 67% win rate. As far as when you put on a trade and then you follow through on that trade with the exit rules, if that is a 67%er, you've got a heck of a trading plan. You've got a heck of a trading plan to be following. Most trading plans are more around the 58-60 level, which is fine. The idea is that if you can control your risk, that illuminates these figures. The figures mean nothing unless you can control the risk. And I will say that that even a trading plan with 67% winners or more, you hear about these trading plans that are 80 or 90%. I've asked them to prove that to me. I'm still waiting for the response, but most of them are in that 60-70% range that have been around for a while and have been making money for traders for a long time. They are all capable They are all capable of 3 or 4 or 5 losers in a row. Okay, that's an important statement, because if you don't realize that and trade with that awareness, then you're going to say, well, I had 2 winners, 2 losers in a row. I'm sure this one is going to get it all back. I mean, that's the odds. I mean, it's a 2 out of 3 kind of. And what you do is then you overtrade in that next position in order to get back the loss. No. In fact, it probably should be the other way around, but depending on your personality, of which I think is an important part of trading, to have a trading plan fit your personality rather than you trying to fit the trading plan. I think that's why we all, a lot of traders jump around, and I did in the beginning, to different trading plans, thinking that one of these is going to fit. You need to do the self-analysis first. But my point here is that risk management is important no matter what phase you're in during the day, whether you're making money, whether you've had 2 losses in a row. All of that doesn't matter. Each trade is a fungible event. When you're ready to make a trade, everything lines up, you make your trade. Okay, and you follow your rules, and you keep your risk keep your risk low. If you have and what I like to do, assuming that you've tested and have one of these 65, 67% trading plans, where you get a majority of winners, what I suggest is you take your nest egg and you divide it by 10 or 20 parts, whatever that means to you, and risk one of the 1/20th each time you take a trade. This way, you're never going to slide back too far. And when you progress, because it's 2 out of 3, you'll progress nicely. So don't worry about the profit. The profit will come if you can control the risk. Let's go to number 2. Be confident in the why of your trading plan. This kind of harkens back to something I just said. It's one thing to have a trading plan. It's one thing for somebody to just show you all the great data that they've produced and all the money that they make. They hand you the trading plan, or you buy the trading plan. And you go to live trading rooms, and somehow it doesn't work for you. Somehow you're hesitating. You're just not sure. It's because you are not confident with the why of the trading plan. Why is the trading plan asking me to do this? And should I do it? And it shouldn't just be because it's tested 2 out of 3 times to be a winning trade. That's not enough. That's not enough. You've got to know where. So in other words, if your trading plan uses Fibonacci, then you have to dig into what Fibonacci is. I mean, you're going to wind up following the trading plan based on the signals that it gives you, but the underneath mechanism, whether it's a mechanical or the underneath mechanism, it's got to be believed in. If you're using Fibonacci, you better know that Fibonacci is a universal truth, and that whether you're looking at the spiral galaxy or you're looking at a head of broccoli, it doesn't really matter. Those 2 entities follow the same law of expansion that is delivered through Fibonacci, and so that can start your belief, so that when it doesn't look like it's the right place to go, but your trading plan tells you to do it, or you're hesitating because you just lost 2 trades in a row, and you're wondering if the market is going to continue to be choppy and should you be trading it, all of that disappears when you understand the why of your plan and why your trading plan is asking you to do something. So whatever it is, whether it's Elliott or Fibonacci or moving averages crossing, or the 50 crossing the 200, whatever it is, you have to believe in the why of your plan, not just testing your plan, but the why, but the why of your plan. You've got to know the mechanical truths. But when you get into a sticky situation, and in trading, it's usually 2 or 3 losses in a row. I'm not a guy that says go ahead and quit. If you've been following a trading plan, the more trades you put on, the more responsible trades, the more you're likely to get the result that the testing has uncovered for you. So, it's okay to work through losses. It's okay, and it's okay to take a break if you know yourself. Take a rest, go forget it that day and go to that. But in general, a couple of losses shouldn't stop you from continuing to trade, in my opinion, because if you've got a good trading plan and you know the why of it, then you're bound for success in the end. Okay. And again, the idea you'll never get to the end if you don't keep the losses under control, as we've talked about. Okay, the third element, the third thing that you have to do is you've got to look back on the effectiveness of your trading plan. And I've capitalized the word daily because I do this daily. I have been trading for 4 decades, and I don't even have to ask Ken if he does it. He does it. I see Marina's name up there. She does it. We all do it, and I'm going to give it to you right now. What you want to do is that each day that you trade, you want to take a look at the action from yesterday. If you're trading a 5-minute candle chart in the S&P, you want to take a look at how that would have done yesterday if you had followed every one of your signals. If you followed your signal to get in, if you followed your plan to get out, if you followed everything just the way it was written and tested, then you're going to, and if you look at yesterday's action and you were able to say, if I had followed my trading plan the way it is written and tested, how would I have done? If you cannot say that you would have done okay or very well, some range, or if you didn't do well that day, go back another day and another day. Go back 3 days. Over a 3-day period, you should be able to say to yourself with conviction that if I follow my trading plan, I will do well to very well. And look at how nicely it got through those 3 days of angst that other traders, less than I am, would have not realized if I didn't look back. I will say to you that a good trading plan, most of the time, you don't have to look past yesterday. Okay, so every day you want to confirm the effectiveness of your plan. Because why am I saying this? It's because the world is coming at you all the time. And it really doesn't matter, the negativity in trading. I mean, you probably stop trading and listen to the news. All of this is input. Well, I know I'm thinking about going long here, but they just did this to the interest rate. Forget all of that. Everything is in the price, okay? And if you have a trading plan that honors the price, and then you're going to do very well. Okay, so that is number 3. Number 4 is one of my favorites. Take a break. We all like to take a break. Listen, again, I said that you want to work yourself through 2, you get 2 losses in a row. You really want to work through that. You want to have enough trust to do that. That's a good test of your trust in your trading plan. But if you're waiting and waiting all day long, and your patience is being pulled, maybe you want to take a break. If things aren't feeling right or going right from the standpoint, you have 2 nice trades, they give you some really nice signals, but they make a small profit and a small loss. And somehow you feel that, and you missed another trade, you feel you're a little bit off. Okay, stop. There's plenty of opportunities in trading. You're best off clearing your mind, taking a break, whether that's a break the rest of the day or clearing your mind for an hour. I'm famous for 20-minute naps. Okay, I'm sorry for that pop up there. I'm famous for 20-minute naps. So I take a 20-minute nap and I go, whatever your form of a break is. Some people meditate. I have a lot of more than just a couple of traders that will sit there and meditate. That's fine. Center yourself, go back at it. Taking a break is important. And here is something that I want to emphasize, sticking to the A trade. You want to identify and stick to your A+ trade. What's an A+ trade? An A+ trade is your best setup to enter into a trade. When you enter into a trade through your A+ setup, that is your best chance of having the trade go your way. And you can only do that through testing and through journaling your trades. If you stick to your A+ trades and you have the patience to do that, you are putting yourself in a much more positive situation. Okay, so of these structural situations, I would say that if you're an accountant or somebody that's so into the numbers that this lecture kind of seems too out there for you, listen. This is the one that you want to test your triggers. You want to listen, you want to get started correctly. There's nothing worse than there's a lot of things worse, but you don't want to put in a B+ or an A- trade where you're not giving yourself the best opportunity. So identify and stick to your A+ trades and your setups, okay, the A+ trade setups to get you into a trade properly. Okay, so let's review the 5 simple steps. And I want to give you kind of an extra thought. The first one, of course, was being comfortable with your risk. And really, it doesn't matter where you are in trading. That's important. The plan, you want to know the why of your plan. Unless you know the guts of it, you're going to have that. It doesn't, when I say hesitate, it could be a half a second. I mean, when I see a setup going on, I have my hand on the mouse. I have it depressed, waiting to undepress it. So let go of that depression so that I get in. I'm not willing to waste a second. You know how fast the markets are. So you've got to be confident with the why of your trading plan. Okay. And then look back at the effectiveness and your effectiveness of your pronunciations and your plans, whatever it is, but do it on a daily basis. I think you're going to really find that gives you a spark that says, hey, I don't know where I found the 2 losing trades yesterday, but if I had just kept trading yesterday, I would have had a fabulous day. Look back on the effectiveness of your plan. And of course, take a break. If it doesn't feel good, if it's not the right time. In fact, I would say this to you real quick. A trader said to me the other day that he only has 90 minutes to trade. I was coaching him on our trading plan. He said, I only have 90 minutes to trade. So he was looking at that as a negative. I said, that is a positive. And the reason this is a positive is these shorter time frame within reason. I mean, if you can trade for 2 minutes, that's not going to do. But a 90-minute chunk of trading, you're going to have to focus on. You need to focus on that 90 minutes. It's more important to get it right in 90 minutes because you don't have any other time to recover. It helps your focus to restrict your time. So if you're trading all day and you're not being successful, stop that. Trade 3 days a week. Trade for from 7 to 12, whatever. Start with a 5-hour chunk, but that's an extra one for you. Okay, but take a reboot. Anyway, and then of course the idea of identifying and sticking to your A trades, that's important. So I want to give you something. I've got nothing to sell, but I want to mention to you something. The mental and emotional piece is really controlled by your subconscious mind. And the conscious mind is what we're hearing. It's what we talk to ourselves with. Hi, Norman, you're doing real well today. You're giving a great presentation. I think people are really liking it. Who knows what's happening? You could be hating this presentation. But my mind is saying things to, it is the subconscious mind that holds the truth for you. If you say to yourself, I'm not sure, I'm a little bit afraid to get in. I just lost a couple of trades and maybe I should wait. When your trading plan, and when you're dealing on the conscious level and your trading plan tells you to take a trade, you're going to hesitate to take that trade because your subconscious mind is holding that fear for you. So here's a picture of what the subconscious mind, this is an actual picture. I'm sure it's clearer in the neutron telescope or whatever the hell they use. But those little lines, these lines right here, these are neural pathways. Neural pathways, meaning that these are actually thought energies. And if you say, I'm not sure if I should be taking the trade, I can't believe it knocked me out, they keep on taking my trades, all of a sudden that will build what they call a neural net. All these fearful inputs will build a neural net that will now be the dominant neural net in your subconscious mind, meaning that when your conscious mind, when we're trading and your trading plan asks you to take a trade, you will hesitate because you're being referred to your subconscious mind, which is always true for you. You've created this. Okay, the way you uncreate it is to create a new neural net that will supplant this one with suggestions like, I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. If you can get yourself into a very light meditative state, everybody can take 3 or 4 deep breaths. This is what we have in content for you if you're interested in the future. This is really where the change comes in. I've given you the structural change, but sometimes it's not enough because you're being controlled by a neural net that is not working for you. So again, we've got meditations to help and to build these neural nets literally in a week. by doing a meditation for 8 minutes a day, one time, 8 minutes a day in a week, you can build a neural net that will now jump on a trade because you have total confidence in your system. All right, let me show you what I'm giving you right now. And this is, if you go to thedisciplinetrader.com, I'd like you to opt in, right? It's right here. This is where at the bottom of this is just a clip off the top of the website. And that's maybe one of you sweating during a trade, but you want to end the fear of, and the stress. But I want you to I want you to get to know me a little bit. Just like you have to trust your trading plan, you got to trust the person who's delivering all this great helpful advice to you. So go ahead and go to thedisciplinetrader.com, and you'll see this black stripe right above this kind of changes on the site, but put your first name and email address in there and start receiving my weekly 4-minute drills for traders. I talk like this because this is the only way to talk to a struggling trader that's not getting, if you've been struggling, you're still in it, you have it to do it. You have it to succeed. You just got to get through the mental piece. That's where I can really help you. So opt in at that site and I will be there for you.
Well, thanks, Norm. Not only was that the best presentation I've ever seen from you, but that's like the best presentation on trader coaching and mental I've ever seen. So outstanding, man. It's appreciate it. Really well done.
I appreciate it. I've worked on it. I've worked on it, but
It
you know,
shows,
we
yeah.
work with a lot of people. But I really enjoyed it. You can see my passion around it. This is is the key. This is the
You're
key,
good,
the mental
yeah.
part.
Yeah, you're really good at it. Outstanding. So thank you so much. It's the best single presentation I've ever seen on trader coaching was what you just did. So thank you.
Thank you. And then, yeah, I'll even give you your screen back.
Okay, thanks. What a deal. Yeah, you got people get involved with Norm Hallett. He is the best. He's the only one to work with the trader coaching on the mental because he's the best. And what he said made so much sense, right? You know, on focus and the rest of it. So an A+ trade setups and the rest of it. So thanks, Norm.
Thank you.
And I looked at my email. We first communicated back in 2008. So we've known each other like 15 years. So it's been a while. So yeah, well,
Not long enough.
okay, thanks. So Marina, are you here? Let me we have Marina the trader chick. Marina Villatoro. Are you here,
Hi,
Marina?
I am
Hey.
here. How are you? Hi, Norman.
Stick around for Marina. She's coming from some foreign land, I'm sure.
Yeah, yeah.
Hi there. Hi, everybody.
Hi. Let me make you a co-host. And it was a great presentation, wasn't it, from Norm? It's always a pleasure to hear
Yeah.
Norm speak. He's good.
I really enjoy Norms. I like the nap because
Yeah.
I'm also a master napper.
Yeah, you're really good too. So let's see. Can I? What do I have to do? I need to.
I'm able to share my screen.
Okay, cool.
Hang on one sec. Let me just organize it here. Hang on. Why am I not seeing this? Oh, I see. There we go. There we go. 1 second, everybody. Just figuring out how to share. There we go.
So how you been? It's been a while. We haven't done one of these in a year and a half or two. You been okay?
Has it been that long?
Yeah, it's been a while.
Wow. Yeah, I've moved to a new country.
Okay.
I
Cool.
now live in Barcelona. I think last time
Mhm.
then we chatted was when I was still living in Guatemala.
Right, yeah.
How are you? Where
Well,
are you living?
I'm in Orange County in California, so keeping busy.
Yes.
But
I lived in San Diego for a
yeah,
while.
it's great. Yeah. Well, let me let's see. Can we get your video too? Let me see.
Not sure.
Hmm.
There we are.
There you are. Okay, cool. Well, I will skedaddle and folks listen to Marina Villatoro. She's got some really good insights and a lot of trading strategies that I use too. And so it's good synergy. She's really smart. She knows her stuff. So listen to her, and I will see you later. Thanks.
Thanks, Ken. Hi, everybody. Thank you so much for joining us today. I really am happy to be here. And I want to just jump in because we only have a little bit of time together. So I'm really excited to just chat with you guys. And today what I really want to talk about is how you could simplify your day trading. Because a lot of times we get really concerned about how the markets are moving and different types of conditions. So you could actually be able to trade under any condition. And that's the beauty of day trading, that once we understand what the market is telling us, we are able to do and work with it rather than try to beat it or predict the market. That's the beauty of understanding what the market is actually telling us. And this is me right here. I am Marina, the Trader Chick. And as I was telling Ken, me and my family just recently moved to Barcelona. As a matter of fact, I've actually been an expat for over 20 years at this point. We used to live in Costa Rica and in Guatemala, and just recently, about a year and a half ago, we moved to Barcelona. Probably one of the best decisions that we have made. Absolutely love living in Barcelona. And this is me before I started day trading. So before I was day trading, I was actually a fitness instructor and a travel writer. So I still am a travel writer because I do have my own travel site. But I used to be a fitness instructor. And the reason why I bring this up is because a lot of people think that you have to have like an economics background, financial background. And the reality is you don't need either of those or any of those. You could do and come from any background. That's the beauty of day trading. So today I really want to focus on 4 basic strategies that will help us understand what the market is telling us. And these strategies, I compare them to when you're driving a car, right? When you first sat down in the car, you probably didn't even realize that there's strategies to driving a car, right? Like you look in the rear view mirror to see if anybody's behind you. You know where the steering wheel is. You know where the brakes are. Today, when you hop in the car, it's just so automatic for you that you don't even think about it. But at one point, you did have to think about it, right? Oops, hang on a second here. Just did something with the, okay. So basically, you could do the same with the market. It could be pretty much automatic when you start to look at certain things about it. And that's what I want to talk to you guys about. So before I move on, I am offering you the entire presentation that I'm going to have completely for free because it is going to be pretty quick for us to go through. So I want you guys to have it. It's totally free. You could access it. And then also you could go along as we move along. So please go to makingofaDaytrader.com and you'll able to access it right here. MakingofaDaytrader.com and you can get the whole thing for free. So let's get into the fun stuff. Market movement and the breakdown of a trend. Once you understand how the market moves and really understanding the trend, you will be able to trade under any condition in any kind of market. So there's really only 3 trends in, doesn't matter what you'll ever look at, but there's 3 trends, okay? One is the upward trend. Obviously, the other one is the downward trend, but a lot of times we overlook the sideways trend. And the sideways trend is really, to me, the most important trend of all. Why is that? Because this is where we tend to lose the majority of our money because this is where the market is indecisive. This is where the market is back and forth. It's the chop. It's the, I guess you could call it the channeling market, the sideways market, the indecision zone. It doesn't matter what you really call it. It's a place where there's very little momentum going on. Okay, so just so we kind of get like the gist of what is an upward trend. An upward trend is obviously each pivot is higher than the next, right? It's pretty simple to understand, but this is where you will go in for a buy, right? What does that mean? You're going in long. You're taking a long position. That means you are entering at a low price point, exiting at a higher price point, and you're taking the profit in between. This is what you'll do when you have an uptrend, right? A trending market going up. Then we have the downward trend. The downward trend is when you are shorting the market. This is where you are selling. So what happens is that you are selling, meaning you're entering at a higher price point, exiting at a lower price point, and taking all the profit in between. So traders usually make as much, if not more, on the downward trend when we short the market versus when the market is trending up and we're going for the longs, because when you know how to get in correctly for the downward trend, it goes much faster and you are able to profit a lot more from it. So that's the cool thing about understanding about the markets going up and down. And now I really want to focus on that sideways market, on the consolidation area, the transition area. I personally call this a trader's worst enemy because, again, This is where the majority of our money gets lost. So once we learn how to spot it, we can do two things. We can, one is avoid them, and two, know when it's breaking through or breaking out of those areas so that we can get into the most profitable trades. Now, what is a consolidation market? It's literally where the market is it's indecisive, right? It is bouncing back and forth, it's channeling. It doesn't really have any real direction. And it doesn't matter if the market is going strongly in one direction and then hits the sideways area, it could very easily completely transition and change into an entirely other trend. And once we understand how to read that, we are able to capitalize on staying out of it and also entering when it does either transition or break out. So this is what a consolidation market looks like. We need to be able to draw in the areas to really identify those areas, because if you don't know how to identify those areas, you're going to be missing out on where to enter or where to get out entirely. All right, so this is what a consolidation market looks like. It's a flat area. It is literally, I want you to think of it kind of like a flat line, like when the doctors, those types of things, those flat lines. This is what this is about, right? And we want to avoid these areas entirely. So the important thing is to understand is that there are two types of traders. Okay, we have this one type of trader that believes that the trend is your friend kind of a trader, and when they see this, they're recognizing, oh, you know what, this is a strong uptrend. The market is consolidating. It's going to break out. It's going to continue. I'm going to go long. Then you have the other kind of a trader, which is the contrarian trader. And when they're seeing this kind of a market, they're saying to themselves, you know what, the market's been going up all day. It's got to correct. I'm going to start to short the market. But the reality is, and the smartest traders, this is what they're looking at. They're looking at the market and they're understanding, you know what? I don't know what the market is going to be doing. I have to sit and wait out and understand what the market is going to do when it finally just consolidates and sits out. And that is the most important thing, is knowing when to sit out. And when you are recognizing these areas, sitting out is probably going to be the smartest. One, it will save you a lot of money. Two, you will recognize when it breaks out so that you could get in and start to take the most profitable types of trades. All right, and the markets do that all the time. As you could notice, it consolidates, it can break out, consolidates, transition, consolidates, move up again. So understanding those areas, you will be able to stay out or profit. So what are those areas? These areas are the support and the resistance area. And the thing is with areas overall is that the market respects them. And if the market is respecting them, we, individual retail traders, also need to respect these areas. All right, so let's figure this out. What is a support area? So when the market is going down really strongly and all of a sudden starts to hit the floor of the market, one time, two times, three times, anything more than three times, that is already a strong support area. And you need to draw it in. Why do you need to draw it in? Because when you are in the live market, putting your money into the live market, you need to see what's to the left of you on the chart, right? So when you are in the live market and your money is there, your heart is palpitating. It's kind of like an adrenaline rush. And a lot of times we get blinded because we're nervous, right? It's completely normal when our money is on the line. But when you look to the left and you're noticing, okay, there was a support area here. This is the reason why I decided it broke through. It continued on. Having these drawings truly helps, right? So the support area is the floor of the market. You're recognizing where the market is revisiting over and over again. Also, the market can hit this area even further down in the day. So if you have it already drawn in, you understand that this is an area that is respected and you want to either stay out entirely, or if you already are in and you're noticing that it's hitting that area, get out while you still can and save what you have. So areas are drawn on top and the bottom to signify channels. The top is the resistance area. It is the ceiling of the market. And as you can notice here, it is hit over and over and over again. This is an entire trading session for me right here. And as you could notice, the market revisits, even though it had changed and given me an entirely new trend, it then went back to the upper trend again, but boom, it hit that area because the market respects it. And we need to understand that, because that, me having this drawn in, I've already saved myself from entering into a trade that might not go any further. So I will wait out to see when it changes direction. Now, a lot of times people ask me, how do you know when these areas are beginning? So these are usually the reversal areas and divergences. I call it the trader's map to shift in direction and trend. And I absolutely love them. The double tops, the triple tops, the double bottoms, the triple bottoms, the head and shoulders. This, to me, is the most important telltale signs. So when I am looking at reversal patterns, that doesn't necessarily mean that it is going to reverse. It is a very high probability, but it's not 100%. However, what it is 100% is telling me that the market is losing its strength, that it is becoming weak. And I never want to have my money in a weak market. And that is exactly what happens when I notice reversal patterns. And when it's coupled with divergence, forget about it. That is my absolute favorite. So what is divergence? As you can see here, the price action is going down, right? Yet my MACDs, which is the red dots that you're looking at, that's my favorite indicator. The MACDs is the least lagging indicator, but if you focus on it, the red dots, they are flat and actually turning upwards. That is divergence, right? It's showing me that the price action is doing one thing, meanwhile my MACDs are doing the other thing. What does that mean? It literally means that the market is losing its strength. And I need to simply sit out and wait until the market tells me what it's going to do. And it's going to give me that confirmation. I need to wait for the confirmation to either tell me it's going to break out or it's going to completely do a transition altogether and into a new trend. So when you put these things together, you're going to be able to figure out where the breakout areas happen and how to spot those valid breakouts. The thing is, breakouts are probably some of the most powerful trades out there. And when you can recognize when it actually does the breakout, then you can get in and profit on that particular trade, right? That is the absolute greatest. Yes, Doc, please go to makingofaDaytrader.com and you will get, here, I'm doing it right now, makingofaDaytrader.com, and you will be able to download this presentation completely for free. Okay, so please go and find out right there. Oops, hang on one second. What just happened? Okay, here we go. All right, so again, guys, when you are seeing these resistance areas or support areas, and all of a sudden you're seeing a breakout, boom, I want to put this all together for you guys, okay? So like I said here, Doc, makingofaDaytrader.com, you could download this entire presentation completely for free. And this way you can study it on your own. And you could also contact me if you have any questions about it as well. All right, this is how I look for breakout trades, right? So as you can see here, I have a pretty significant, really strong resistance area. Now, if you look at my MACDs, this is the red dots, that dashed black line below, you'll notice that it's stuck in a very low area. What does that mean? For instance, the black dashed line on the MACDs, it means 0. It means there's absolutely no strength in the market, right? And usually when you are in a channeling market, the red dots, the MACDs pretty much hover around the black dashed line. However, I want you guys to look a little bit further where it says the entry, where the market had blasted through the resistance area and has blasted through the MACDs. This is when I know that this is a really strong confirmation for the breakout trade. And that's exactly why I look for my entry points here. Okay, so I like to look at it through the MACDs, and also I use for the price action, I use 3 EMA lines, and I use my EMA lines for the actual entry points. That's what I use them for. Now, as I was talking earlier, I talk about transitioning into a whole new trend. And this is what it looks like, right? Again, you need to draw out those areas, guys. You really need to focus on those areas, and then boom, it breaks out and goes the opposite direction. And when you enter in the beginning of a new trend, that is absolutely a golden moment. Why? Because that's when the market runs the furthest in that direction. And if you can get in as quick as possible, and that just means by reading what is in front of you, you can start to really understand and profit really well. So as you can see here, we had a really strong area. Boom. Now it went through the dash line, totally strong. Bam, instant reaction trade. All right, guys, so that is how I spot those areas. The thing is here, we have absolutely everything we need to take action, right? The thing at the end of the day, though, is how do you know that you are doing it right? How do you know that you are seeing the market correctly when you have no one to actually show it to or be accountable for, right? Because all of this is great, but the real question is, how do I get started? How do I get started? And I usually get this question more from seasoned traders versus beginning traders, because a lot of times they just really want to understand how to be consistent, profitable and consistent all the time. And interestingly enough, it's usually lacking the understanding of the basics, like understanding where the resistance area is, where the support area is, when the breakout happens. Those are the absolute basics, right? And once you understand that, you have such a strong foundation that you're able to spot those areas and just dive in. And that makes it much more automatic and much more enjoyable, right? So it's the same thing as when you hop in a car, right? Today you hop in that car, you know exactly where the steering wheel is, you know where the gear shift is, you know where the clutch is, you know where the brake is. So you don't have to worry about that, right? Because the more you worry about those things, the more you are not fully present and able to understand what to do because you're too preoccupied, right? That's the beauty of when we jump in the car. We just know where to go. We are ready to go, right? I would like for you guys to be a little bit more creative in your mind, but imagine somebody jumped in your car, got in your car, they've never been in a car before, and you're saying to them, all right, guys, buckle up because that seatbelt is going to save your life. But they've never been in a car. They've never heard of a seatbelt. They don't know what you're talking about. And all they're saying to themselves is, okay, I need to buckle up a seatbelt. What is that? I don't know where it is, but it's going to save my life, right? All they needed to do was to be shown what that seatbelt is, and it totally changes everything. Now they feel secure in your car, right? And a lot of times we don't get that. We don't get those super basic safety measures. And that happened to me over and over and over again when I first began, to the point where I spent over $20,000 on my own trainings, and I still was struggling and losing money because I was never taught the basics. I was never taught to understand where the basics are, how to recognize what a resistance area is, how to understand divergence, what are reversal patterns, and those change your entire, those are those aha moments. And literally what happened was I was sitting in these chat rooms, they were constantly saying, oh, this is a great trade, this is why you got to go in. And I didn't understand why, but I was like, all right, if they're saying it's a good trade, that means I got to get in. Boom. And what happens when you don't really know what you're doing? You're chasing trades. By the time you chase that trade, it was already turned around. And now your ego is telling you, you got to stay in. And next thing you know, you lose money. And that's what happened to me. I ended up losing almost $4,000 in 5 minutes. And at this point, it was almost 2 years that I was doing, and I just couldn't do it anymore. I felt like a complete failure. I totally felt like defeated, and I quit. I quit. But here's the thing, guys. All of us in this room, I can guarantee, are bit by the trading bug. We are bit by this bug. And you know why? You know why it never stops itching? Is because deep down inside, we know that we could do this. We know we can do this, right? Like I knew that I could do this. If other people are able to do this, what is missing for me? And that's when I came back after, I think I quit for like 4 months. And I came back, and what I ended up doing was I used to have 3 charts. I got rid of 3 monitors. I got rid of 2 monitors, went down to 1 chart, 1 monitor, eliminated all of my indicators. I had over 10 indicators. And I started to study the basics. I mean, like really, really study the basics. And slowly I put in my 2 indicators that I love now. It makes it simple and fun and so enjoyable. But I also got back to the basics. And interestingly enough, one of my students a couple of years back says to me, Marina, your philosophy is very similar to Coach John Wooden. I've never heard of Coach John Wooden before. So of course I looked him up and I was like, who is this guy? And Coach John Wooden was a legendary coach, He was one of the top basketball coaches ever and a life coach. And his entire philosophy was, and teaching was, when in doubt, get back to the basics. This guy had 88 national championships, brought his team to 88 national championships, 10 NCAAs. He literally trained the top of the top eight players. But every time he began his season, he would go back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter what A player you are, but if you forget the basics, you could be out on that court, your shoe is not tied properly, you could be running, boom, you sprain your ankle and you're out for the season. You got to go back to the basics. You got to put that foundation there. And because of that, I have a very special offer for you guys today, only participants only. It's called my introductory course to bootcamp for day trading. And all of this, $97. So I want you guys to go to this URL right now, bootcampfordaytrading.com. Put bootcampfordaytrading.com. If you are having trouble putting it in, HTTPS, just put that in as well, please. Okay, bootcampfordaytrading.com. I'm going to break it down for you. What you guys get, first of all, I help you figure out and set up your platform. A lot of times people really struggle with that. We want to get past that immediately and have fun. Then we really jump in and dive into the dissection of the markets, understanding those trends, really, really getting the beauty of those magic telltale signs so that they're this automatic and you can just do it automatically without even thinking twice, because reversal patterns will change your life. Okay. And for me, understanding where the support areas are, resistance areas, drawing them in, and then applying it with divergences. Honestly, guys, that is golden. And the coolest thing of all is that it's free. It's totally free with whatever platform you are on. So you do not need to spend money on more indicators. And the power of the breakout. If you don't know what you're looking for, you're going to miss out on this amazing trade. And most importantly of all, staying out of the fake out breakouts to avoid them, because a lot of people get caught in them and you can't. All right. So again, you have free access to the entire curriculum. All of this is valued at $1,600. You get all of this. All right. But remember, I asked you in the beginning, how do you know that you're doing it right? So what I'm offering in that one-time price of $97, one entire month of one-on-one mentorship, coaching with me, unlimited feedback. So there is no question, how do you know if you're doing it right? Because a mentor could be the answer to it all. All right, again, $97, bootcampfordaytrading.com. If you guys go here, bootcampfordaytrading.com, this is where you go right here. This is the order form. And you will see right here, one-time price, $97. You guys get all of this automatically included. So put in bootcampfordaytrading.com right here, bootcampfordaytrading.com. You get the one-time fee, $97. All right, I see that there's a question. Do we get the recording? I think Ken will send you the recording afterwards, right?
Right.
Yeah, I'm not actually sure.
Yeah, we will. Yeah.
Okay, so yes, you will definitely get a recording for this. And I just wanted to say thank you guys for taking your time to be here, because time is our greatest commodity. And the fact that you took your time out to spend it with us really means so much. And I just wanted to say thank you. And again, I don't offer this price ever. The course is usually $297. It is $97 if you want to do a payment plan. I have it's $59 two times, but even with the payment plan, you automatically get access to absolutely everything and you begin working with me automatically. So again, guys, go to bootcampfordaytrading.com, and I'm super excited to work with you guys. And thank you again for taking this time to be here tonight. And thanks, Ken, for inviting me.
Well, thanks,
I really
Marina.
enjoyed it.
Well, thanks. Me too. It's I mean, think about how much money you guys lose in trading. Like if she could help save you $97, which is like a tiny amount, money well spent. And you're very good too. So highly recommend work with all these people. They're wonderful educators and traders, and they could really help. So thanks, Marina. The Trader Tech, a great presentation.
Thank you. And
Makes a lot of
thanks,
sense.
Doc, for the feedback as well. Thank you, everybody.
All right.
Bye. Have a great day.
You too. Thanks. All right. Well, what do you guys think? Do you guys like this format that I put together? That the half hour is let me know. I mean, I know most people use hour-long presentations. I'm not known for my patience. I'm a day trader, so I like half-hour presentations. Does that work for you guys? I'm just doing a quick
Yeah,
chat.
I love the 30 minutes. I think it's great.
Great. Okay. And how about our listeners out there? What do you guys think? Really good turnout. Let's chat away. Well, okay. Well, I'm going to. Yeah, this has been recorded, so I will get the replay link out to you guys, and you'll get to watch that. So I want to say thanks to all my wonderful speakers, really good people. Yeah, I trust them, so that's why they're here. So I'm going to go up last. Harry was going to speak, but he got it's an accident story. So I'm going to go next and at last, and wanted to thank all of you for being here. And I'm Ken Calhoun. I founded Day Trading University 25 years ago, so it's been exciting. What we're going to look at today is price action, swing, and intraday trades. And we just want to go run through a few patterns that I find work well for me, and hopefully they'll work well for you as well. So, and of course, I'm a real trader, so I'm always working on today's charts, assuming the charting software works. Of course, it freezes up when I want to make a presentation. That's just like par for the course. Like, you know, what's going to happen. There's always something with technology, right? So you don't let it fluster. You just calmly wait for it to rebuild. And here we go. Now, are there any tickers that you guys would like me to look at? If so, let me know. I type in some actual stock tickers and I'll pull up the swing trading charts for them, or day trades. Just let me know if you want day or swing trades or both. All right, well, I'm going to continue on here and make sure everything is working. Looks like audio and video is in good shape, so let's do it. You know, one of the charts that I like best was this one, NUTX. It went from 6 to 24. The single most important thing you need to know when it comes to scanning for locating stocks is the range. The most important part of the chart is not the chart. It's the numbers on the right side of the chart. True, right? If the bottom number was like 10 and the top number was 11, who cares? Why would you trade that? This is magnificent. It's bottom number 6. The range is 24. Range is the most important determinant for success besides risk management in trading. You must trade wide range instruments. Most traders screw up. They ask me about, Ken, could you pull up the Disney chart? Or they're horribly leveraged. The other side of that is to trade the penny stocks that these stupid chat room operator morons do. And they're trying to say, I traded 10,000 shares with 60 cents stock. And they pump and dump low float, low volume stocks into their masses. And it's a game of whack-a-mole and who can beat the person in the punch. That's no good. That doesn't work. Really, it doesn't work. What works is trade like a professional. So range, if I were here with market makers, I mean, I get the call for institutional guys. I know this stuff. Range is more important than anything. Well, trend and range is critical. Now, one of the setups I want you to look at is what I call it's a small candle followed by a large whole body candle pattern. It's very simple. Small candle, large candle in green and an uptrend. And there's always to operationalize that or quantify that. The main thing is, do you have a small whole body and a larger body? I like to say 1.5 times the size of the first candle is what the second candle should look like. So if we look at some of these, you'll see that they frequently precede monster blowouts. And I haven't even looked at these charts today for this. I was day trading, not swing trading. This works. I mean, it could hit me with any ticker and I'll show you what I mean. Does everyone see this pattern? Small candle, large candle, big move up, and it starts to go down, you get out. One of the biggest mistakes that I found in working with tens of thousands of traders since 1999 is y'all don't get out soon enough. Y'all just stick around too long. Now, I don't know if you've ever been in a bad job or bad marriage or some of both, and wouldn't we have been better if we left earlier rather than later? So just saying, at a trade or two, hit it or quit it, or just, I shouldn't say it. Get out sooner rather than later, okay? It's when in doubt, get out. You can always, cash is king. On the count of three, can all of you, if I was doing some money show, I'd say 1, 2, 3, cash is king. So say it to yourself, 1, 2, 3, cash is king. Because it is. Your money should only be put out there with high probability trades, like several of our speakers have mentioned, and in combination with clear signals, like my colleague Steve Nissen was mentioning about candlesticks, Western technicals, with trade management backing it up. So those are some patterns. Let's move on. And I'm not going to sit here and talk for much longer because I've got places to be and people to be with them. But you guys are important, so I want to give you some of my best patterns. One of the things that you also want to look at is if you see a bearish engulfing, this is a bearish engulf, right? Large forward body wrapped around a small one, things aren't looking good, right? So one of the things I want you to learn is, you learn from Steve Nissen the candlestick charts, think about timing of pattern entries and exits, and are you too early or too late? And that's always a challenge, right? And a lot of times we don't know. It's like, well, okay, go and trade. That's okay. The key to success in trading is position sizing. And it's a big loss, really sad to Van Thorpe. He's a great guy. We talked on the phone and he's a wonderful man. And I've interviewed him. Van Thorpe is no longer with us, but position sizing, scaling into winners, scaling out of losers, absolutely critical. Every time you put on a trade, and this is game-changing stuff. I know my stuff. I know my shit. Every time you put on a trade, look at it as, and make it a sequence of 2 or 3 trades at the minimum. Don't go the opposite. It's not like more is better. 15 trades that's no good. It's no bueno. Back on this, 2 to 3, maybe 4 trades per instrument. I like to do 2 or 3 trades. That's the 85% of my trade volume would be 2 to 3 trades. Every single trade should be a sequence of trades. So you put on a smaller trade. If it works, if it's starting to work out, you play with the house's money by adding. So you buy at 10, you buy at 12, put the break even at stop at 11. So you break even, plan with the house's money, let it run. Maybe double down again. Keep it simple, 2 or 3 trades. Do not do what I did when I started trading back in the 90s is, study the heck out of it. And the MACD crosses over and all the squiggly line indicators line up. So I'm going to put on the trade, bum, 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 and the trade didn't work out. Nope. And repeat again. You waste a lot of money and time. You have to be more like a Wall Street pro. We put on what Norm would call a feeler trade. You put on a small test trade, see where it goes from there. If it latches on, you get paid. It's starting to work out. Now you're playing, you have house's money, offsets a stop if it goes down. So then you can start putting on size. That makes sense? And that was actually really valuable. So I think that's going to be the end of my presentation. I'm a busy guy. I'll stick around just a bit longer. Let me pull up the day trading chart here. It's great having you guys here. It's a really big turnout. Day trading. Push swing. Okay, now in my live trading room at Trading Open, it's my name of the room. We look at high volatility charts on the 1-minute chart. And I always zoom in like this so we can see what's going on in candlestick land. If I think we're at a pivot or a slowdown or breakout inflection point. And what I do is I type in the exact triggers to use for my traders. So this is one of my favorite, actually I would say this is my favorite thing to day trade is SOXs, S-O-X-S. It's the leveraged semiconductor short. So when chips go down, it just goes up. Now look at the range, 20 to 22, it's pretty good. And big picture, it's got even more range. And I type in where to enter live before it gets there. And as soon as we start to make some money or it starts to go against us, say we get out here. And so you get step-by-step directions on exactly what to trade. Dun, 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 dun. But I'm in a good mood because a lot of reasons to be. Now, if you're looking for a pivot trade, I spent years trying to learn how to catch bottoms and catch pivots and limited success. The vast majority of bounce trades don't work out. I found the hard way. It's only the extremes that you want to play with on bounce trades. So something in an extreme that goes to a known support level. For example, in my live room, you'll learn how to use whole numbers as support and resistance, because so often, you'll have like 16 whole number resistance, 15 whole number support, or just pick random charts and you'll see what I mean, like 35 support, right? 35 support, 36 resistance. Let me mark that out. Whole number support and resistance is not rocket science, right? Very simple. That's why I like to teach, because simple combined with great risk management is, the best way to trade. This one was good earlier, GLMD. Anyway, there's so many different opportunities out there in the markets. I want you guys to take advantage of it and learn with me, let's see. There weren't a ton of great day trading charts today, but when you can get a run, so the key then is trade instruments that have tight price action, not fuzzy all over the place, like a nice tight 3/4 of a point run, and you can hopefully get a half of that or something as a trade setup. So learning how to recognize the difference between trades that work and those that don't from the patterns is very helpful. And I think that's about it. Any questions, let me know. I'm going to, my pitch is a really good one. I do say so myself. You can have a whole month with me in my live room for just $97, and there's no back end. There's no, on this offer, there's no subscription. And if you don't like it, I'll give you money back. So I take all the risk. $97, give me a chance. Be with me in the live room and see my entries and exits. And you get the whole month with me for $97, and it does not renew at the end. You can check that in PayPal. You see it's non-recurring. So join. I'm not going to go through the whole page. Well, sure, why not? Here's a good example. I'm a real trader. I'm not a BSer. I'm a real trader. And here's proof. My 1099 from Fidelity a couple of years back did over 124 million worth of order flow in a single year. Dun, 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 dun. I'm a baller. I'm a trader. So it's what I do. So join me. I actually know what I'm talking about. Really, I honestly do. So one thing that I'm good at. Picking the right woman, no good at. Women, I'm no good at. But trading, I'm good at. So this is good. Live markets, live alerts, $97. And it's a money back guarantee. So hasta la vista, you guys do great. Thank you for being here with me and my colleagues. They're really good people. I trust them. That's why they're here. And I want to wish you guys the best in your own trades. And I will see you at some future event, I hope. So take care, best wishes. And I will get the recording of this out to you guys within a day or two. So take care and trade smart. Bye for now. Keeping it real. Okay, goodbye.